I'm going to do this via an email system. Shake my hand, by the way. Good evening, right? Good evening, right? So please don't panic. I will ask for some type of assignments before we start class. I'll send them probably out this weekend. So you all have charts. You'll have 2 or 3 charts, nothing too crazy. And what I'm going to ask from you is just to simply give me market direction. I'm going to ask you to point out all supply and demand levels on your chart on the governing time frame. I'm going to ask you to zoom into immediate areas of value, and then fundamentally ask you to tell me what to do, right? So I'm your client. I want to buy or sell. So you're going to tell me when to buy, where to buy, or when to sell, or you know, etc. You're going to point me in the right way. So that's what the format is going to look like. So everyone's just going to have about 2 or 3 charts. They won't be the same. And if possible, it'd be nice if you guys could get it done before we have class next week, Tuesday, so that I can then get some feedback going. All right. Otherwise, if you delay giving them to me and I get busy, it's gone. Like it'll take me forever to ever come back to that kind of stuff, right? But I do believe once in a while we should kind of like test ourselves, you know, I must make sure that what I'm saying is sinking in. Please don't panic. Don't see it as, you know, a life and death type of situation. It's just that if I can have a good look at where you are, I want to understand what you are understanding. That will help me a lot in how I move forward, right? But anyways, good evening to all of you. Bitcoin is going wild. I want to talk about Bitcoin for exactly 30 seconds. Because I always promise to do a massive crypto video, and it's finally on my YouTube calendar, right? So I've got about 92 videos to do on trading psychology, which is actually a model by itself. So we call that our module 5, but I can't do a live class around that stuff. So I'm just going to dump it all on YouTube. But I will be doing crypto stuff now that the Wealthy in 3 Years program has finally started. Bitcoin is showing a lot of longs right now. And when we say longs, we mean price needs to go up, right? Price is going up, it's creating demand upon demand going up. And I'm going to do multiple time frame analysis tonight. And I just want to use this is really good and will be very helpful. Yeah, okay, cool, Kakoma, right, cool. Kakoma was one of those guys at school who used to love homework. You can always tell. Brilliant, man. It's just, yeah, once in a while I do that. I mean, if I had more help around academy stuff, it would probably be just a big routine stuff to do, because already senior traders have to submit those kind of things on a weekly basis. And I've got 4 guys who help me look at their portfolios. Right. So this is Bitcoin, right? And you know, if you know me, then you know I'm a crypto diehard for many reasons. China has banned Bitcoin again. And if it helps, China has banned a lot of things in the world. China once upon a time banned Google. I mean, I've got a long list of stuff. I did some light research around 4 a.m. this morning. I can tell you now that China bans don't really matter. They matter in the short run, but in the long-term run, they don't really matter. So China once banned Google, China banned YouTube, China banned Facebook, China banned Wikipedia, China banned Netflix, China banned Twitter, China has now banned Bitcoin, right? So it's neither here nor there. Remember, once again, China owns the most Bitcoin. When we talk about the biggest institutions, so bank, hedge firm, or country, state, government, Reserve Bank, China owns the most Bitcoin. They're banning the same asset that they own the most, right? So just be very careful about that. My next Bitcoin video that I'll drop on YouTube video, if you're a cryptocurrency maniac or if you're interested in this kind of stuff, is extremely important. So for the first time, I did a search. I looked for it and I actually realized that nobody actually really explains what happened in 2007. A lot of people call it a crash. Fine. This was not a market crash. This was actually the involvement of the banking sector, right? So EFT talk and all that kind of stuff. That talk is happening again. In fact, there's been massive campaigns to get a Bitcoin EFT. Canada has something similar. I just can't seem to find a broker that will allow me as an African to buy into it. As soon as I do, I'm going to send that over to the Wealthy in 3 Years program, because EFTs are the safest ways institutions can get into crypto. It's like basically condensing crypto into a stock, okay? And when it's a stock, it's regulated and institutions can get in. If institutions get in, it ain't going anywhere ever again. But more importantly, its trajectory is going extremely high. All right, so a couple of things, if that is to happen, if we're to get a broad agreement to actually break down Bitcoin and really institutionalize it and really put it into EFTs and all that kind of stuff, this thing is going to crash. Retail trader conversation, crash. I'm saying this to say I have a whole 1 hour video to explain the process properly, but I don't have the time. So if I never drop this, at least those of you who came to class today, you should be prepared for it. And you want this to happen. You want the crash to happen. For the first few EFTs floating around the world, this was fundamentally important. Why? Smart money, when finally given the blessing to enter a market, will never buy anything this high, ever. Impossible, right? So let's watch carefully. If you've read my notes in the Wealth in 3 Years program, your job is to dollar cost average. All right. So please do not forget that your job is to dollar cost average. Right. Let me just mute everyone. There we go. What's the dollar cost average? And then I have to really explain this to everyone else later on this weekend, or I'll send an email or short video, whatever. But let's say Bitcoin. Let's not say what's the price of Bitcoin today. Does anyone know? Oh, God. Good evening. I know, remember, I get 20 minutes in every class to do an introduction of whatever I want to talk about. And I want to talk about this right now because I don't know when I'll talk about it. And I can at least come back and say I did tell 1 or 2 or 3 people. It's just so much is in my head, but not enough time. Right. So Bitcoin today is at 53,718. Which screen am I on? Am I on TradeView on whiteboard? I hope I'm on whiteboard. 53,718. That's the price of Bitcoin right now. If you're a trader, it doesn't matter. If you're a trader, you want to trade supply and demand. If you're an investor, it matters. This is why it matters. There's a group of people we call crypto whales. Crypto whales are hidden wallets and all sorts of people who probably bought Bitcoin at $100 and they bought tons and tons. My biggest crypto asset, I don't mind telling you guys, is Ethereum. I've got more Ethereum than anything else. After this October, I'm going to have more XRP than anything else. XRP is just damn cheap, right? It is stupid not to buy it. It's cheap. Even if it fails, it's so cheap. Like I don't drink, I don't smoke. But last year, December, I asked everyone who had a December budget in South Africa because of the lockdowns and there was no chisanyamas and there was no end of year party to take their drinking, clubbing, smoking budget for Christmas and Happy New Year's and buy XRP, right? Let me show you what happened with that. And it was like a simple video I did. It was my final war room for the year 2020. It's still on our Facebook page. And the title of that video was, "It is easy to make money," or something like that. This is what happened. And I want you guys to understand this because there isn't a crypto course yet. All right. Supply and demand works for everything, but I really should take time to develop something specifically for crypto markets. It's just that retail traders are interesting. And they think courses and time commitment is meant to be all for free. Right, this is April, let's find December. This video is literally on my Facebook page. December 2020, I had 2 days in. I just gotten back from holiday on the 28th or the 29th of December. And this is the monthly candle of XRP. XRP is it's basically the original, it was called the Bitcoin killer. All right, originally when it was originally made, it was called the Bitcoin killer because it does the job 10 times better when you're looking at transferring money. And actually, the Bank of America, where Warren Buffett has put in a lot of money, right? He's sold out of a lot of his banking positions and he's reinvested into one bank. It's currently the only bank getting ready to adopt XRP, like so it's the technology behind it. Long story short, right? So this is where price was. Guys, I want you to understand this because I'll say it again. I hope to God I never say this on YouTube because I will always be misunderstood. But I'll say it now in a class where I feel safe, where I've got traders who understand how we operate. Making money in the market is easy. I don't want to lie to you. Whether you're trading or you're investing, that stuff is easy because this stuff is so repetitive. It is so straightforward. All you need to get together is yourself. You are the problem. I'm being honest. And up until you stop being the problem in your own financial life, money will be difficult. I was the problem in my financial life for about 4 years. Before that, I didn't even have the desire to build wealth. I just wanted to be okay, and then I met my partner, and then we had dreams and wanted to have kids, and it's like I had to grow up, and I couldn't just be a university kid. And then eventually I then stepped into a full transformation. Making money in the market is easy. This is what XRP looks like on the monthly time frame. Governing chart important. I'm showing you the stuff because, again, it plays out the exact same way in forex, blah, 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 blah. So this is one of the charts I sent to the Wealthy in 3 Years program. You see this range here? This is called Talitha areas. The creators of XRP were buying into their own positions. When you see consolidation that looks like this in cryptocurrency and in the stock markets, we call it insider trading. This is when the people who know what's about to happen get in first. They bought this stuff for 1 cent, 2 cents. They didn't buy 1 or 2. They bought millions and trillions and billions of XRP tokens. In fact, the owners of XRP, I think, currently still own 20 billion tokens, and then they release the rest for the world. Consolidation to the areas will happen before any imbalance. This is the explosion of XRP. It is literally dated the same as Bitcoin. Bitcoin's biggest push up was in 2017. When Bitcoin exploded, it pulled a lot of cryptos together. This was before altcoin season and crypto season were in big fights and in big debates. Papa Bitcoin had to lead the way for everything. So this is when Ethereum jumps from $50 to $100 to $300, etc., 2017. December last year, I told people to buy XRP, and I fundamentally said, if it fails, it fails. If just use your alcohol budget, your smoking budget, your bribe budget, your extra budget, whatever it is. At that time, this thing was at 17 cents. The coin was 17 cents, right? With these tokens, the first big psychological target is $1. And then after $1, we want to evaluate its technology. Want to evaluate its sustainability in the crypto ecosystem. It's no longer about how many people are buying it. It's about its use value, like DeFi projects, network protocols. I'll teach you all that stuff one day when there's time. Now, as markets were here, all right, you can see this was a bearish engulfing pattern, but I was fairly confident that price was sitting at a demand. And even if it wasn't, right, it couldn't go back to zero. That is the advantage of getting in early, right? What are you going to do? You're going to do an oil and go into negative numbers, right? You will sit at 0.01 for a while. Patience. These are XRP whales. They just kept building a position, right? So you've got my financial notes for the Wealthy Investment Club. I talk a lot about building a position. You have to build a position. You can't just buy once unless you have a lot of money. You have a lot of money. So the first time, after fixing my mind, which took a long time, away to get rid of assets so we could build position. I needed capital to build an account, to build positions, right? If you can't do that and you start off with a small account, small investment, you are going to have to dollar cost average, which is to buy systematically. I get paid on the 15th. If that's your payday on the 15th, that means a part of your budget for groceries, rent, electricity must go to your future investments. That's how you start to build. On the first month, it'll feel stupid. It'll feel so lame. On the second month, it'll be like, oh my God, when will I ever make money? You have no idea when assets will compound and explode. You and I don't get to control them. But what markets will do is they will multiply what they find. If they find $1 in your portfolio, they'll multiply $1 to $3. If they find 100, they'll push it to 300. This is just an example. If they find 1,000, it'll go back. Granted, everything, risk assessments, blah, 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 you could lose it all, yada, 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 yada. We know all that stuff. I'm simply saying this thing was 17 cents. 17 pennies, whatever cents is in America. On the 31st, on the 28th of December, when I bought it and I told everyone I was buying, this thing rallied all the way up. Our target was always $2 because we knew that is where the supply comes to an end. Supply and demand. You can see this is where the body is, right? These weeks were way too long. These weeks are emotional weeks, right? We'll talk about emotional weeks in module 3, but essentially, this is the close, right? So this was the 2017 market crash, right? And so we knew that there were sellers there. Who's going to sell? These guys. These guys who bought billions and billions of XRP for 1 cent are going to sell when they get 1,000. Do you guys see this properly? Do you see this? Look at I'm measuring the rate of return. There is no bank in the world and in space and in Mars with aliens, even in heaven. I don't think there's a bank in heaven that can give you 1,217% interest back on your investment, right? It is fundamentally, XRP might never give such gains back again. You only get one shot. I'm starting like this because I'm going back to multiple time frame analysis. There'll be multiple sell levels on the charts. There are 5 types of supply and demand. I've taught them to you. There'll be the top sell. You only get 1 or 2 chances in your life to get that top sell. Everything else after that starts to reduce your probability to sustain and maintain the movement in the market. So it is now a risk trade. So we're going to talk about A-class trades, B-class trades, C-class trades. This was a once-in-a-lifetime buy-in opportunity if you didn't buy in here in 2014, 15, 16, because you didn't even know that XRP existed, right? That's understandable. I don't even think I knew about XRP in 2016. I was very mainstream Luno. So that was, for me, Bitcoin, Ethereum, a little bit of Bitcoin Cash, the Binance coin. I was just very old school crypto. These tokens, not my thing. I bought in a bit here, bought in a bit somewhere there in January 2020. In December, I went in hard everyone who followed those instructions. Some of them are in your group. We bought TRX that December, XRP, a couple of tokens. They gave back 1,217 returns if you wanted to sell. So some people sold there off, some people took a little bit of profits. Now remember, if you put $1,000 US, that's the return you got. If you put $100 US, that's the return you got. But you're owning assets. It's like stocks and crypto are so fundamentally important, better than forex in many regards, because you keep the asset. So you can keep trading and keep growing, developing, blowing accounts here and there as you master yourself. But your assets that you invest in, whether you're a good trader or not, depending on your own personal journey, your assets can keep making money for you. Remember this. Now, the whole reason why I'm here is to remind you guys, in case I don't tell anyone, that a big crypto crash is coming. I can't tell you when right now. I don't think the China FUD I don't think China banning cryptocurrency is gonna create a crash. I do believe SEC is gonna get involved. I do believe regulation is going to take place. And when regulation takes place, it's a good news for crypto long-term holders, because what it means is more institutions can come in. When institutions come in, it's no longer Leroy telling you, please buy Bitcoin for $50 and change your life in 3 to 4 years. It's big institutions coming with 50 million, 10 billion, 100 million, right? Those institutions will never, ever get into Bitcoin when Bitcoin is this high. They will lobby, they'll create rules, they'll create a FUD, they'll create lawsuits, they'll do whatever they can to push price down, because it's completely unfair for them. They're entering, I know there's just so much going on here, right? They're entering this market after all this has happened, right? And they fundamentally are going to throw a fit. They're going to keep saying there's no ways we can buy $100 billion US worth of cryptocurrency if the price is going to be $53,000 US. We would much rather try and invest somewhere here or somewhere there. You are equipped with this information. You guys now know how to read charts. You are now at the end of module 1. Let me get a cleaner chart for you. This is a monthly time frame on Bitcoin. This is the monthly time frame on Bitcoin. If you look carefully, and maybe we need to re-emphasize this topic because I don't remember us doing a good job at it. This idea of unfilled orders. You guys remember that term? It's in your week 1 or week 2 PDF. And we spoke about it briefly, all right? But there it is here. This is an unfilled order. What's an unfilled order? An unfilled order is an order block. What's an order block? An order block is my 365 candle, right? All my supplies and demands create order blocks. We know they are supplies or demands because it's an imbalance rule, blah, blah, blah. But the correct term for them is an order block. So that red candle right there is an order block. What type is it? It's a 365 candle. What's a 365 candle? Well, a 365 candle is a continuation pattern. What's it continuing? This upward rally, market pause, beautiful imbalance, right? This is an unfilled order. Price, in other words, from what you know from module 1, has not come back to even get a fresh touch. Whose money is in it? It's unfilled, right? It's unfilled. So when I take a trade, my order gets filled. In fact, your broker tells you your order has been filled. That sum, they're filling your order. You are now, your trade, whether you're right or wrong, is now engaged in the market. It's filled. So when you see an area of value, and that area of value, for those of you who've already done the course and you're just here for some refresh and enlightenment, there's a lot of problems on this chart. There's a lot of problems on this chart. And one of these is a trap, right? I'm not a postmodernist. A postmodernist believes all truth is relative. So your truth and my truth are the same. We can both go outside and say the sky is blue, and I'm like, no, the sky is red, right? In the markets, unfortunately, there's just one truth and the rest is a lie. One of these is going to fail, if not all of them, until price gets here. Okay, if you don't understand why these are demands, it's because these are module 2 bullish engulfment demands. But you can see there's a turn, you can see there's a 365 candle. If you get an imbalance, then this becomes a big demand. I have millions of doubts that price will be regulated all the way up here. I'm not saying markets can't pump up. I'm happy for price to pump up because I'd never sell. I don't think I'll ever sell Bitcoin. I watched an interesting interview a while back that changed my perspective. And it was like, rich people would never do that. Rich people don't sell assets. When rich people get land, they build flats, they build offices, they build homes, and then they rent this stuff out forever, for generations and generations. Bitcoin is exactly like that. It's an asset that generates value. If you sell your land, you're like that child who sold his family's inheritance for a bowl of soup. Basically, that's who you are in market thinking. You never get rid of a cash cow. You never get rid of a stock that pays you well. What you want from a stock is to keep extracting dividends. If your dividends is very small, it means your position in that company is small. So what you want to do, instead of getting rid of the stock, is to keep adding into the stock. If your trajectory of that stock is in the next 5 years, the stock is worth $5, and the next 5 years is going to be worth $100. Then you want to keep buying here, buying here, buying here. This is what I mean by dollar cost averaging. So as I wrap this whole thing up, because it's already 6:30, it's time for our class now, but we're saving time by starting early because I've done this introduction anyways. Bitcoin today is 5178. To dollar cost average is this. If the price of Bitcoin keeps going up, which it might, its current target right now, from what I can tell, is about 64,000 US dollars, right? That's what whales and retail traders want. Okay, they want 64K. I hope they don't get it. But if they do get it, you have no choice. You're gonna have to keep buying, keep buying, keep buying, keep buying, keep buying, keep buying. This is called dollar cost averaging. So every month you're gonna put $200, $50, $30, whatever you want, whatever you can afford, is up to you. But dollar cost averaging works 10 times better when markets are falling. So as Bitcoin starts to crash, that's when I get more aggressive in trading, because I never open my bank account and then go buy crypto. Not anymore anyways. I used to. Took forever to get to where I am today. Now, if I want to invest in something, if tomorrow's NFP, I don't think I can trade NFP because my partner has this big charity thing on Saturday. So we've been raising funds for children with congenital heart disease, because you must make an impact in your community. So all my accounts have been focused on that. We're gonna do a big thing on Saturday. We're gonna surprise a lot of people. But if I wanted to trade crypto, buy Bitcoin, and I'm dollar cost averaging, this concept is so important. It works 10 times better when markets are falling. So when markets are falling, if Bitcoin was to hit that bearish engulfing pattern on the weekly, and it actually doesn't go to 64 but goes back to 20, I don't think it will right now, but let's say it does. Let's say the crash that I'm talking about happens in the month of October, right? Then the more Bitcoin drops to 40K, 50K, I start buying. I start looking at my charts and I start taking trades on the daily to supply, and I start withdrawing like a crazy person on a week to week, and I keep buying. The more price goes down to 30,000 rands, I buy. If I bought here for $100 when markets were at 53, but then markets dropped to like maybe $45,000, right? In a week, here I'd buy for $200. I'm just making these numbers up just to give you. Here I'd buy for $300. What am I doing? I am increasing my position as Bitcoin keeps dropping. Very important. Why? Because the lower Bitcoin drops, the cheaper I get it. So if she gets to 30,000, I'm like, all right, let's take profit on a trade. Doesn't matter if it has reached TP or not. I'm going to withdraw 800. It's going to affect my trading plan, but I can always fix that, right? But this is something, this is a deal that I can never get back. By the time Bitcoin is at 20, look at me. If I have means, if I have money, you know what the most amazing thing, and I know Jay's all the way from the Philippines, and me and Jenny still need to do a one-on-one and get to know each other and learn each other and talk about a lot of 365 stuff. But Jay, I don't know if it's the same, you know, where you're from in the Philippines, but in Africa, I can literally close my eyes and point, turn around and point, especially in the country that I'm in South Africa. And I can guarantee you that 7 out of 10 South Africans, I can guarantee this statistically, 7 out of 10 South Africans are extremely comfortable taking out anywhere between a 1 million to 3 million rands home loan. I can guarantee this. I'm not South African, okay? But I've been here for about almost 10 years now. And unfortunately, or fortunately, all I've done is just study the economy, right, at various levels. I am telling you right now, out of whether they qualify or not, 7 out of 10 South Africans are very comfortable. Let me quickly tell you how much that is in US dollars for those of you in Kenya and Jay in the Philippines. So that's about a 200,000 US dollar loan if you go with the 3 million rand. So they are comfortable getting a 200,000 US dollar loan from the bank to buy a home, the mortgage, right? So they're going to spend 20 years paying back this. But obviously, you know how the game works, right? Banks, when banks were created, they needed an asset. You can't just sell cash. The asset was always property. Servicing vehicles, servicing houses, and loans, personal loans. That was the product. That's the banking product. But another day, another time. Now, after 20 years, with all the interest, right, 9 out of 10 times, most will pay 3 times the value of the property. So if you bought a 1 million rand house, right, if the house was 1 million, the banks will pay the owner of that house that you're trying to buy from 1 million. And then you will then have to pay the bank back that 1 million or 3 million or 200,000 US dollars in 20 years with interest. That means by the time you're done, you're paying back roughly about 600,000 US dollars, right, depending on the loan. So we're going to use 3 million rands as the basis point. If you qualify, so you're going to qualify for different amounts. Some will qualify for 500,000, some will qualify for 1 million. Please, I'm not ignoring all of that stuff. So you'll pay back at about 9 million rands in about 20 years. Don't forget about inflation. Don't forget about the fact that the Reserve Bank governor, right, has the ability throughout those 20 years to keep changing the interest rates, which is what we trade as traders, right? Remember, we were trading New Zealand interest just recently. Those interest rates affect how much you're going to pay, aggressively, non-aggressively. Right now, South Africa, by the way, has one of the cheapest interest rates on housing for a very long time. There's a reason for that. Anyways, this is it. 7 out of 10 South Africans are extremely comfortable paying this amount. Now, if you can qualify for a home loan, anywhere between 1 to 2.3 million rands, it means you are working, you've got some type of job. It might not be the best job in the world. It might pay very little. But if the bank qualifies you for a home loan, it means you might be risky, but there is a chance that they'll make a lot of money if they just jump you in. The housing crisis in 2008, they gave a lot of people who didn't even qualify for home loans, right? And they couldn't pay that stuff back. So banks will always take their procedures now, but that's just how it works. If 7 out of 10 people who are comfortable in doing this can do it, it means they qualify for personal loans. You understand? Excuse me, sorry. If you can qualify for a home loan, it means you can qualify. And a personal loan is much smaller, right? You could qualify for a 50,000 rand personal loan. You could qualify for 100,000 personal loan. You could qualify for 30,000 rands. And sorry, I know some of you are not in South Africa, so just give you the quick dollar value. I'm going somewhere with this. This is not financial advice. 30,000 rands personal loan is about 2,000 US dollars. All right, so let's use that. So you've got a situation here. You're tired of renting. You want to buy a house. You want to own a house. Finally, permanent in your admin job, whatever it is. All right, there you go. You get a home loan. But because you've got a salary, you could get a 30,000 rand personal loan or 50,000 rand personal loan, and the terms will be different. You might need to pay it back in a year, and the interest rate on, say, 30,000 might mean you end up paying it back as 45,000 rand. Something weird like that. 7 out of 10 would far much more rather get a home loan than get a personal loan. And it's based on financial education. It's just not their fault. But even if I ran a campaign around this stuff, even if I ran a campaign and put a marketing budget behind it, I would be wasting my time. Because in Africa, and I'm assuming that everywhere else around the world, we have to change financial culture, right? And I'm not going to waste my life trying to change the perspective of a lot of people. Well, I'll do it in my own way, but not like this. But it is 10 times more profitable to get a personal loan that you can handle with your salary, that you're going to be paying back bit by bit. You get a 60,000 rand lump sum amount and you drop that stuff on an asset. You keep renting. You guys want to know wealthy in 3 years. There's so many hacks. You keep renting for another 3 years in that small flat, whatever it is, right? You keep renting. And you got, I don't know who I'm talking to, but I want to get this out of the way. You get your 60,000 rand loan, convert that into dollars. My whiteboard is such a big mess. And you put that into an asset. Now, in your salary, you're busy dollar cost averaging between now and next year. Let's say crypto falls a little bit, 20,000. This is just you with your little money, you're sacrificing, you're making ends meet, your dollar cost averaging. When markets get to an order block that you and I know about, do you understand what I'm saying? One of the 5, let's go back to the Bitcoin chart. When markets finally, 3 people in the room, what happened to them? Right, let's get them in. Let's get them in real quick. I understand crypto charts more than I do every chart. I find it easy, especially after your course. Wongi, you've always loved crypto. This is your personal bias. But I'm very happy because you literally came specifically for crypto. But maybe during the one-on-ones, we can break down FX. FX is a lot of other noise around it, but I'm completely happy. I'm happy for that feedback. I'm happy about that feedback. Right. Now, remember, I'm going somewhere with this. When you get to an order block like this, so let's look at Bitcoin again. Let's say you don't know about the fundamentals that I'm talking about. Let's say you don't know, you don't care about Bitcoin crashing, or, whatever. But one day you realize that markets are dropping. Just like where this May drop, crypto winter, which we very much needed. If you followed me even earlier, I kept saying it was coming because price was too parabolic. I'm telling you right now, you and I know that is a fresh area of value. We know this. You and I are completely, man, I wish I typed. I have people in the senior trader program who are 6-figure traders who don't use their money, who use their good credit to go to the banks, to get loans, to put into assets, to use the interest rate. I just showed you XRP paid 1,270% interest. They pay off 7% interest every year on the loan from the bank. If you read, where is my copy? If you read Currency Fables, the book I told you about yesterday, Fables of a Currency Trader by Rob Booker, there is an entire hedge fund that borrows money from Japan. Why? Japan is a safe haven. Why is Japan a safe haven? Japan is a safe haven because it's got the lowest interest rate. So a registered, very good credit institution in America, Europe, Africa, actually, it doesn't matter. Japan doesn't care. As long as you've got good credit and they can pay it back, you could go borrow 100 million, not for us individuals, but as an institution, as an investing firm, at 0 to 1% interest rate. They go get that capital and they trade it, right? They don't use their personal money. Now I'm saying you are dollar cost averaging. I don't want to lose you on this. This Bitcoin is here today. Let's say it starts to fall. As it falls, $100, $50, 60, 300, it keeps going up. As Bitcoin goes down, your investment goes up. As Bitcoin goes down, you are investing more because you're starting to buy cheaper. But when it gets down here, this is where you drop it like it's hot. You and I know markets have arrived at a substantial demand. Does that make sense? You could start to see crypto going up, which I think is an even much more realistic possibility in the short-term run. We're getting to October, the final month. We're waiting for the next 2 weeks. All big stocks, tech stocks, Tesla has already announced its earnings report. Apple is coming in. We're going to be seeing integrations as these big tech companies announce the progress to their shareholders and what their plans are for crypto. FOMC in the last meeting literally said he doesn't want to ban, he has no plans of banning Bitcoin, just some type of regulation that needs to come up, and the thing about a digital currency. So this could go up. Like I said, 64 to 84 is a good range for December this year. 64K all the way to 84,000 US dollars is a good range for December. As it's going up, you have no choice but to keep buying as well, buying the asset, right? Even though you're buying it higher and higher, but at some point in time, your asset, specifically this one, and most cryptocurrencies, they are going to come down crashing. And when they come down crashing, you dollar cost average. What's going to happen is when markets finally get to that demand, and there's a weekly demand before that monthly demand. So it could be anywhere. The crash could stop at 20,000. At 20,000 US dollars on Bitcoin is a strong level of support. Bitcoin is a retail trader's chart. It's a retail trader's asset. So we must understand a few retail trader thinking psychological levels. It could bounce off at 20,000 before dropping any further. It could stop at 20,000, right? 20,000 could be the final mark, and it rallies all the way up again. But when markets get here, so look at this now as I conclude. Here you put $100 because it was at 53,000, and that's all you had. And then it dropped to 45, and then you ended up putting 120 the following month. And when it dropped to 30,000, you put 180. And it was dropping to, I don't know, 25,000, you put $300. You saved up for it. As it dropped to 20,000, you put 400 US dollars. And eventually, cryptocurrency is somewhere here. Ethereum could be dropping to 1,000. Whatever floats your boat. I'm not saying these things are going to crash now. I'm teaching you how to dollar cost average into an asset to build position. All of this is your investment, and you are psychologically watching your investments go down. Understand that. In the short term, the $100 that you put is losing value. Now you've got about 220 losing value, 180 losing value plus the 220. You look like a fool. When markets make contact with the demand, if I could just get a couple of people, I'm not saying go out and get personal loans and buy assets. You still have to pay the bank if your cryptocurrency crashes. You can't say it's Leroy's fault. I'm simply saying, instead of getting tied to a 20-year house loan, a simple 1-year personal loan that you stack on an asset like XRP, Ethereum, on a significant demand, where you know for a fact this is going to happen, means you're going to put about 2,000 US dollars here. This is not financial advice. I'm walking you through simple mathematics. You are buying now at 12,000. So you're buying your Bitcoin at 12,000. Now, what's the history of Bitcoin? Bitcoin moved from 20,000 to 4,000 US dollars. And then in COVID, took from 40,000 US dollars and exploded to 60. Why? Because markets found a demand. Markets not only found a demand, markets went to go collect unfilled orders where big whale buyers wait. They wait. They're not every day hustling in the markets. They stacked up their orders. They stack up their reserves. They are productive in many areas of their lives. They pool finances together and they wait at specific levels. It's a business. If I run a fish and chips business and it costs me $300 every month to buy stock, at the end of that month, for me to be profitable, I must cover stock plus labor, plus utilities, electricity, and have profits after paying all of that. If your job is to always buy things when they're flying up, buying momentum, when they come down hurting, you better be extra dedicated to buy into the dip. This is buying into the dip. Now you're 2,000. By the time it comes back here, You can imagine now, by the time your 2000 finally arrives, I hope I'm not wasting anyone's time in their minds. This is so important. When your 2000, because it's the same thing with currencies, but more so important for investing. When your 2000 finally arrives here, where your Bitcoin was at 53,000, the last time you were here, this 2000 is ridiculous, right? This 2000 is looking like 12K. I haven't done the maths. I'm just giving you a very realistic, almost close assumption. It's about 12,000 US dollars. Remember, you just owe this, and now you've been paying it off bit by bit on monthly installments. Personal loan. I'm not saying you should go get one. I'm simply saying I know a couple of people who, when I run these simulations, follow my advice, and it's worked very well for them. I know institutions do this every day. This has worked very well. But you know what has also worked very well? All of this. Remember, you were dollar cost averaging. So now, as you were buying low, when markets start to go up, all of a sudden, all these low buys that you took and when price was falling, you see this 400 US dollars is starting to really pick up with all the other money you bought here. Maybe you bought for 1,000. This $300 is starting to pick up. Then it's starting to pick up. All of a sudden, in 2 to 3 years of holding, this is part 2, hold. If you're going to invest, get that tummy, that gut of an investor. It is not for tomorrow. No, is it for next year? And you know, I call it Wealthy in 3 Years program because I'm praying to God that 3 years is very small for retail traders, that it will lure them in. Most of them don't know, and some of you are already in the program. Haha, newsflash. When we get to 3 years, sometimes we might close some assets, sell off some stocks to reinvest. We're building wealth. Okay, now when markets get here to 53, your 2000 is 12K, your 100 that you bought up there is finally in profits because this is the first time markets are going beyond. But all of this that you're buying the dip has come up in value. So your total portfolio value starts to look like something like this. I don't know, man. I'm making these figures up as I go. 15 to 16K, just picking up with all the dollar cost averaging. Does this temperature check, guys? Does this make sense? Because the stuff is coming, it's going to happen. You know what the sad thing is? Last year, I taught people how to trade. They're in the academy. Last year, I lost my mind. Oil dropped to negative. Right? I know it's easy to make this relatable to cryptocurrency because it's a hot new topic. You know, it's everywhere. You can't deny it. Crude oil, Brent oil dropped down to negatives. Did you understand that? You could buy oil for free. That sentence barely makes sense. It was in the negative. Where's crude oil? I'll show it to you right now. This happened months ago. Crude oil dropped. That is minus 27 cents. Please, my Facebook page, I'll accept anyone. It's there. Go through my wall, my old wall. I beg, I try to pay people to jump on this because all you had to do was log on to your trading broker. If you didn't want to buy oil shares or EFTs, you just opened a position anywhere here. This is the monthly chart. Let's go to the daily. Because I've taught you, you understand supply and demand. You now know what all these levels mean. This stuff is not crazy. Look at this thing. Just please look at this thing. If you just started buying oil, I mean, logically, where else was price going to go? The same thing I say to a lot of people last year, December. Where else can XRP go? It's minus 17 cents. If you put 1,000 rands and one token is 17 cents, you're going to get almost over 1,000 XRPs. But if you hold 1,000 XRPs for 5 years, how much money is that? You bought one for 17 cents. 5 years from now, it's $7, $10. How much is that? Where are you going to get that kind of money? It's crazy. Anyways, look at this. This is normal candlesticks on the daily time frame. The first thing that happened here, and we need to build this, is look at this red candle. I mean, I lost my mind. I just started buying like crazy here. Right? Your stop loss can go anywhere. You couldn't even put a stop loss beyond zero, by the way, at that particular time. Brokers didn't have a system for that. I'm talking about last year. It's 2020. It's not like 1998. So most of these buys were just hanging without a stop loss. It's bought, standard lot size, 300 stand. We went crazy with lot sizes. There's nothing to lose. Where else can price go? price will always move from sufficient supply. There was an oil crisis last year. When you see a crisis in the market, you better have a cash reserve. So we start saving. We need to start to generate a saving culture. But we don't run from crises. We follow them. Traders, investors, we chase the storm. When there was an oil crisis, this thing came, it was $1 now. Look at where oil is today. Fundamentally, look at where oil is today, and I dare say a year later and 4 months. Look at where oil is, because you guys, you think investing takes 10,000 years before you can make serious money. This is where oil is today, a year later and about 4 to 5 months. This is the return of investment on oil. Your currencies think the same way. Supply, demand, monthly governor, monthly supply, immediate areas of value. You buy the stuff low, you sell it high. This is oil. If you bought like a crazy person somewhere down here, the return of investment right now is at 5,027%. It's wild. Like, closing this trade for me, I want to spend the money, but I want to see how far it can go. This didn't scare me. Imagine when price was here and this was the first time you started seeing red candles. And you thought at that time, like this was literally in the month of October 2020, blah, blah, blah. So wait, this is April 2020, this is October 2020, last year. If you thought about closing your trade here because you started to see red candles, you would have made last year by October, from April to October, 2,000% on your trade. And then had you held, because all price did was create PCPs and a valid demand. And why would you sell there? Markets had not even approached a valid supply. There's no supply there, right? And you sold off, and a lot of people did when price got to this supply, which made sense. If there was fear in the market, or if you didn't understand that oil needs to go back to $100, etc., you made 3,000% on that trade. You can live off that trade. You do nothing. You don't touch it. You just let it. You just swing. Please swing. Right. I've wasted enough time with class, guys. But please, temperature check. Was this useful? Was this kind of stuff? Because I know I'm ranting. And I know you guys are here for forex and multiple time from analysis, but then when portfolios are being built, you'll be like, he only does this for himself and he doesn't tell us. I really hope this helped you guys. You gotta switch. As a trader, your job is the extraction of value. Okay, trading as a profession is the transference of wealth from one account to another. If I lose a trade, right? If I get stopped out, there was a better trader. There was a better bank. There was a better supply and demand trader out there than me. I wasn't focused today. I broke a rule. I didn't understand what the markets were doing. There was a better trader. Because of that, for my mistake, my money, my wealth must be transferred to that trader's account, because they bought, they sold. Boom, price moved against me, I lost. Forget about this conspiracy theories about brokers. I'm going to give you good brokers. If you go to your own brokers and they do weird things to you, that's a different story. With a good regulated broker, if you lose money in the market, there's a better trader than you, and that's okay. Because that means you can learn to become a better trader. You review that play, you become that person. Maybe it takes you 6 weeks, maybe it takes you 1 month. It will be based on how much attention you give to your own journey. All right. As an investor, so trading as a profession is a transference of wealth. Trading as an exercise is the extraction of wealth. When I trade, I'm going to pull out profits from the market. My job is when I pull out profits, guys, you can talk to my partner. I still operate like how we were 6 years ago. Nothing has changed fundamentally. Like, we just, thank God, no longer at a place where we were 6 years ago, but I'm not like you know, in a casino and jets or 50 girls around me, like all that stupid lifestyle crap, right? You have to be frugal with your finances. I love having a big cash reserve, because a big cash reserve allows me to move money around. And when I say cash, I'm not saying you have to keep it all in the bank or under a mattress. Some of your assets, there's some assets. So a bank will give me 3%. If I go put 100,000 rands today in a bank, the interest I'll get is about 3%. Let's say I use those 30-day accounts that I don't have access to. So after every month, I might get 3%, or maybe if I hold it for a whole year, I might get 7%. right? So my money is safe and it's getting some type of interest. This is based on trying to beat inflation. I might take 100,000 rands to Old Mutual, and Old Mutual will give me back 6% to 12% on my money, but then they'll charge me a 1% fee. This is crazy because a lot of people think a 1% fee is very little money because they don't understand compounding, right? It's crazy how people think, but we'll talk about that another time. Now, I could do that, or I could open my charts and find something stable, something slow, but that gives me 20 to 60%. And there's lots of stuff like that. I can literally put 100,000 rands, and when markets make contact with the demand, calculate my risk, and then have a big stop loss on the monthly time frame if I wanted to, and then hold it up until supply goes. I'm gonna get anywhere between 60 to 80%. Markets beat banks all the time. I can find a simple asset, Ethereum, which when there's a market crash, when there's a crypto winter, will fall, but not as hard as Bitcoin. And it will give me anywhere between 80 to 100 to 200% if I hold it long enough. That's my job from trader to investor. I extract wealth from the markets from trading, but I don't go buy stupid things. I plunge it back for the future. All right, I invest a big portion of it. While we're here, this is a nice template that I was taught by my mentor that I have not taken out of. If I was to withdraw, so fundamentally, unless if I'm testing out an account, which I am right now, I'm currently in the process of finally back testing module 3 for the 4th and last time, I hope, right? But if I'm not using these weird brokers that I keep back testing stuff, and it's just my normal main account, I normally have 1 to 2 withdrawals, and most of them are at the end of the financial quarter. Banks think in 3 months, take profit in 1 year. So I pay myself once or twice every 3 months for expenses, blah, blah, blah. This helps me a lot with SARS for tax, right? And I'll talk about that later, but none of you guys are like licensed traders, so it's not something to worry about. But with SARS, instead of paying myself or being charged tax as a trader, I have got 2 academies registered, the corporation is registered, and then I give myself a salary, and then SARS only taxes me based on my salary, which is far much more better than them taxing me on my capital gains. Very smart. Don't care if it's public, if I share this video, it's legal, it's the right way to do it. Don't give the government a single rand of your money unless you think they deserve it. And in the country I'm in, the government deserves nothing. Right, so I pay myself once or twice per financial quarter. When I pay myself, let's say I pay myself $10, 20% of that is automatically going to go to investments. 9 out of 10 times. 10% is going to go into what I call small-term cash cows. Small-term cash cows is I'll rather trade it. I'll trade it as an investment. So I'll go to, instead of trading on my brokers, I'll go to something like Binance, right? And then try and over leverage. So I'll go really crazy. Like, so this is the only time I break risky rules. And sometimes that will blow up in my face, but it's fine. It's 10% of a lot of profits from a whole lot of money I can lose. But if it doesn't blow up in my face and I take that 10% and I can flip it to 1,000%, 100%, 80%, 60%, and then I do the same thing again. Remember, this 10% is aggressive trading, right? So it'll come back here. So then 20% will go back again into investments. So I'm always growing my investment portfolio. And then the rest will then move into my life, house, other stuff, this year was supposed to buy property, then I dropped the ball. But from next year, that's the target, right? Withdraw for that. Have a plan. Long story short, have a financial plan for your trading first. And when you get that capital going, become consistent, when you can now extract value from the markets, please don't forget to invest. Right. 7 chats. Is it possible to upload this crypto section onto the 365? Wongi, which group? Which group are you talking about? Wongi, just let me know which group and I'll put it wherever you want it. Absolutely. Transformational. Daisy, oh, cool. That's cool. Never a waste. All right, cool. You guys like this stuff. All right, fantastic. I just don't know where to fit this stuff. Yes, Wongi, go ahead.
No, I was saying, could you please upload it to the 365 student group because it was very useful.
Oh, in the okay, not a problem. I'll chop up the video tomorrow. Thank you for the feedback. Well, I'm very happy.
Also, Leroy, is it possible for us to chat about like what you just spoke about tax? Because I feel like I'm gonna suffer with tax.
Suffer with what? Say that again. With
I'm saying in terms of tax.
Tax. Oh, okay. Let me make a note. Let me make a note on the tax thing. I don't want to talk too much about it right now, Bongi, because I'm still trying to understand the new legislation. So because I know you're in South Africa right now. I know SARS right now is trying to figure out a way to tax capital gains. So even if you're not withdrawing and you're still holding, it's not too crazy. I'll be honest with you, it doesn't look too crazy, but it doesn't apply to everyone. It kind of does, but it kind of doesn't, because there has to be like a tax target, right? So you have to have such and such amount of crypto tokens, and then crypto is different, of course, every single asset, so it varies. And then what I do know from last week, there are two firms that are lobbying around meeting SARS halfway and looking at this law, because SARS just rushed into this particular thing. So SARS is not entire. I don't think they understand the entire crypto world properly, because we could hide all our stuff. We could stack our coins. We could convert our Bitcoin and reloan it into the market and then just get paid on interest on that. There's so many things you can do where tax won't even affect you. So can I create a completely different section on that, and I'll drop it on the remote course for everyone? Is that fine with you? I just need about 2 more weeks to fully understand the new legislations. I now know the American stuff, but it's back in Congress for a vote, and I'm still trying to wrap my head around the South African stuff. Can I table that for 2 more weeks?
Yeah, no, that's okay. Thank you so much.
All right, fantastic. Right, guys, thank you so much for the feedback. Thank you all. Everyone seems very useful. All right, cool. So let's rock, guys. Now so that all being said, all your decisions for trade and investment will be based on how you understand and read charts. There's something called fundamental analysis, which looks at the intrinsic value of a price. So if price is at $2, I look at the stock, I look at the balance sheet, I look at the CEO, I look at the company's history, we look at all liability. How is a company in debt? How much cash on hand do they have? If COVID was to hit right now, the stock falls. So those of you in the Wealth in 3-year program, the assets I've chosen, that's the work behind all of that. It takes me time, it's a lot of reports, a lot of financial analysis, and then I take all of that and I go mirror it to my charts. 9 out of 10 times, if an asset from a fundamental perspective is undervalued, so all the stocks I gave you, fundamentally, they're undervalued. I believe they're going to go up in the next 3 to 5 years. That's why we're buying into them now. Okay, that's just how it works. If it's undervalued, 9 out of 10 times, those areas of value, you will start to see a lot of demand over time being built around the pricing of that stock, of that crypto, which call in more investors and pump price up, right? So it's always good to come in as early as possible, right? So that's what we're doing. But everything starts off with multiple time frame analysis. This is important, because if you can't read your charts, you can't make a trading decision and you can't make an investing decision. Now, we did this yesterday, and tonight, if it's okay with you, up until the end of class, let's focus on MTA. Now, I'm going to ask for a personal favor. With the things that my partner has going on around a big fundraiser, I don't even think she knows that tomorrow is NASDAQ, not NASDAQ, sorry, NFP. She doesn't know tomorrow is NFP. She doesn't know that tomorrow is every trader's dream day. And I'm not even going to moan or complain about it. I'm just going to support it throughout the day, not bring it up. So can we look at a couple of NFP charts tonight? In case I can put a pin in order, because I won't be trading NFP live tomorrow or with you or recording, because I know I'll be running around like a crazy person. So can we look at a couple of dollar pairs so that we can actually see if we can predict NFP? I'm going to look at USD CAD, USD ZAR, obviously DXY. There's a lot of charts for multiple type of analysis class, because we need to take it slowly. And then this is if dollar is strong. So if dollar is strong, I remember NFP, I like this stuff a lot to teach around it. If NFP is positive, NFP is positive. The idea is the economy is creating enough jobs, or more jobs than expected, which is very good for the economy. Therefore, that currency is strong. Good economy, strong currency. So for tomorrow, we expect a good NFP will result in a strong DXY. A strong DXY should see rallies across USD pairs like this. So USDXX should be buys. Now, this is terrible advice, because you see it a lot on social media. It's 50% advice. It's not complete, right? So USDXX should be a buy if NFP is positive. If it's good, because we're saying the base currency, You guys with me here? When I say base currency, I'm talking about the first quota. The first quota is the dollar. The dollar is the base, wrong too. The dollar is the base currency. So we're saying this thing here, all this USD are benefiting, they are strong. So if they are strong, they're going to go up, right? While everything else against it goes down. So you want to buy, generally speaking. But what retail traders don't know is we can't just, that's half the story. September NFP, markets used, I think it was bad data. It was bad data. September NFP was terrible. Why am I guessing? Why am I guessing when I can just quickly check? But I'm sure I'm right. I know I'm right. So the last NFP we had was terrible. So I'm sharing the screen. So this is Friday, 2:30 tomorrow, Friday. NFP is here. So if I just click here, I can see the history. September was there. I'm right. 3rd of September was bad. It was bad. They wanted, look at this, 720,000 jobs. They were going to get that, right? But they got 235,000 jobs. Okay, so that's bad. Bad NFP. Cool. Well, when NFP is terrible, when it's bad, the dollar should drop. It's bad for the currency. So you want to sell USD CAD, USD ZAR, USD excess. And the things that you want to buy are the things with the quote the other way. So you want to buy things like Euro USD. Why are you buying it? Well, because USD is weak right now because NFP is bad. That means the euro is going to be naturally stronger than the dollar. So this is going to go up. So that's fundamentally the idea. Well, last NFP on September, you know what? I don't want to waste your time. Let's go to the charts because it's one thing for me to do it theoretically. You got to see this all the time. You see this there? The date is the 3rd of September, 2021. Last month, last NFP. Forecast was 720, but the actual was 235. So it was bad. Here's the usual effect. Actual, when the actual is greater than the forecast, it's good for the currency. So it was bad for the dollar. Let's go back to the whiteboard one more time. It was bad for the dollar because it was terrible. If it was bad for the dollar, then Euro USD was clearly a buy because it's bad for the dollar. Fundamentally, right? That's what those guys, the 100 lot size, NFP, volatility, fundamental analysis, blah, 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 blah. Don't do that crap. Don't do that crap. That's half the story. Supply and demand. There is money in the charts right now. That's got nothing to do with NFP tomorrow. That money in the charts right now are unfilled orders. Those unfilled orders have investors who invested 5 weeks ago, 10 weeks ago, a year ago. They need to get paid first. NFP could be the perfect excuse to push price into those areas of value so that the order blocks and the order flows in, they get triggered. And so if you get hung up on a simplistic fundamental perspective of price, you'll get into trouble. Once again, we're looking for the 3rd of September. So I'm going to show you why correct multiple time frame analysis is very important. I'm going to quickly go to the daily chart. Let's find a friendly Euro USD chart. I'm doing this because yesterday I already kind of like broke. You see, we broke a lot of this, how to do clean multiple time frame analysis, and I'm going to redo it now in a couple of charts, but I've got no pressure because I'm not saying this for the first time. We're just polishing what we did last night, right? So I'm going to clear this up. I'm going to quickly go to the daily time frame. And I want you, with what you understand from the markets right now, to quickly apply your minds as quickly as possible. So let's quickly first find the 3rd of September, because that's when NFP happened. That's June, July, the date is down there. I really want you guys to track this. I don't want you to say, you just make stuff up and I don't even know what he's talking about. And then I'm all confused by myself. 9 September, there. You see that there? That green candle right at the top. You see that green candle right at the top? I was in this trade last month, literally. Sold against every single retail trader in the world, was happy because NFP was negative, so they wanted to buy the euro. So you see that green candle right there? That is literally the 3rd of September. I'm going to put a vertical line, guys. I want to cancel out previous candlesticks, but I don't want them to confuse us. I can't delete them because they're historic. Where's my vertical ray? Please rock with me. If I lose you even for a second, you let me know. So you see this, the red line is now on the 2nd of September. Whoops, right? The red line is now on the 2nd of September, which means the next candlestick right at the top there is the 3rd of September. All right, so we now know how price went last month. Now let's go to our governing chart. Let's do what we do. Let's do what we do. Let's do what we do. I want to prove something to you. I want you to understand this. There's a video I need to do, not this next week. I'm going to back test every NFP. It's going to be too late. So it's going to get like 10 views because NFP is going to drop tomorrow and then traders are going to lose money. And then they're not going to want to watch someone just tell them in hindsight how they could have done it better. So maybe I'll do it next week and then set it to release at the end of the month for November's NFP. Because goodness gracious, you actually have to beg people to learn. It's weird. Like, and look, let's do our basic stuff. I am skipping major turning points. I am skipping profiling the asset because I know you now know the stuff. We've been doing this for 4 weeks together. So you now know everything about this asset, right? These major turning points up there, major turning point demand, somewhere down here, blah, 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 markets coming in. Now I'm just with you moving forward. We're always going to jump straight into the immediate areas of value. Governor weekly daily immediate. So that's the immediate supply. There is no supply higher than that supply. It is the current supply. It is the immediate supply. And we did this yesterday, so I'm not going to waste time. So we know that we identified that as our demand yesterday. I remember this. And then we spoke about how this demand is interesting because it's sitting on top of a demand. So it's demand upon demand and prices falling. We spoke about all of that. The vertical line is showing us the 1st or the 2nd of September. You guys see this stuff there? So this is where markets were 2 days before NFP last month. You feel me? Okay. Now, watch carefully. I told you, I'll teach it to you later, but there's a demand. It's a module 2 demand. So in September, markets had deeply entered an area of value, an order block that had done fresh touch retest, class effect. There's an order block. There was a retouch and there was a fresh touch. Markets weakened that area of value. They planned it. Look at this. May, July, in the month of August, instead of price going up after the retest, markets came even lower. August, 1 month before the September NFP. All right, cool, man. Then NFP happens. Now, where is price now? Okay, in September. Price is here. Where is price coming from? Governing supply. And by the way, there's another supply there, which I'll teach to you next week, on the other week when we start module 2, right? Where's price going? Well, if they're deeply removing a demand, then clearly the next demand is here. Why? Markets move from supply to demand, demand to supply. They can't break that logic. For me to go back up, I must pivot, bounce from a demand. For me to parachute down, I must be coming from a supply. So if markets were here in September, coming from here, removing here, and only going there, what does it mean for Euro USD? Price is coming down. Your job, when I'm done with multiple time frame analysis tonight, and I can do it again in another time if you want me to, your job is not to trade 100% always right. That's not the expectation I have on you in your first year of trading. It takes time, it's a skill. But I definitely expect you to be 90% right on analysis. We'll talk about your trading emotions later. We'll talk about why did you choose this area of value wrong instead of going to the buy low because you're in a rush. You thought price was going to leave you behind. So you bought a little higher. Now price have broken your demand and gone low and hit your stop loss. We'll talk about that stuff later. My expectation though is that after module 1, that you're 90% correct on direction. That I can hire you as a financial analyst, not a trader, right? We'll talk about trading in module 2, but as an analyst, you can always, I can trust you. I can say, look, I've got a client from China, I'm busy right now. Can you please quickly tell them the trajectory of Euro USD for the next 3 months and for the next year? Let them know that we want to put more money into that position and hold it. We believe it's going down. You need to be on top of that by the end of this weekend because we're finishing MTA tonight. And maybe we can recap it again at the end of next week when we're done with the risk management side of trading. I expect that out of you. And if you're not there, that's good, because at least you know your blind spots. It's stuff we need to start working on. You must be efficient in accurately predicting direction. It's not the same thing as trading. We'll talk about trading later. Trading requires a lot of management, self-actualization, emotional intelligence, free from distractions, stopping to project your bills onto your account, blah, 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 later. Right now, direction. Can you just sit in front of a computer and be right week after week about whether the price is going up or down? That's all I'm asking for. And you simply do this exercise. Where is price now? Where is price coming from? Where the hell is price going? If you can answer those questions, me and you are the best of friends. Now, 1st of September, that's the story. Markets are leaving a big supply and creating another supply, and they're on the verge of trying to break a demand. On the weekly time frame, look how it looks like. On the weekly, look what it looks like. On the weekly time frame, would you take a trade like this as a 365 trader? Okay, let's make that even clearer. Let's make that even clearer. So look at this, right? And then markets rally. And then markets come in here. So we'll call that a fresh, although I know senior traders would have not even liked that. They would have called that a fresh touch there. But let's just say we haven't taught the advanced stuff, fresh touch. This is a weekly chart. So there are 5 trading days in a week. It's not like this is just one candle representing 1 hour. Markets come in and hover here and then sit. Retest. Right? So, and then markets try to come up. Right? The markets try to come up. We give them that. Now, your job is to say, well, Leroy has taught me 5 types of supply and demand, because I really have. I've taught you the basic first 5 types of supply and demand in module 1. So now let's talk about them. On the 30th of August, which is where this vertical line is, markets push up into this area here. You guys see that? You know this now, right? You know your Talitha areas, you know your complicated 365 candles, you know how many times you can take an area of value. You know that banks play with this. You just have to keep seeing it over and over again. This is a PCP for this leg. This is a PCP for this leg. Markets came into my PCP, markets basically hovered, right? So now let's draw this area. There's a demand here, a weekly demand here, which has a fresh touch. Now rock with me. Supply and demand number 5. What is that? Anyone remember? Turning points. Price turn, right? So they bounce off a demand and then they do what? They put a bandage. We spoke about bandage in areas of value yesterday. That sometimes before markets can break an area of value, if they want to use it again or put a booby trap, what are they going to do? They're going to put a bandage on it. So they put a demand on top of a demand. So this demand here, fresh touch, this is a creation. As long as our imbalance rule is met, after price turns, we have a demand. So price then rallies back into the governing supply. Fantastic. Now price is coming down again. Price is coming down again. So this is what it looks like right now. We are going to get into NFP of September and why I sold and didn't buy Euro USD. I was supposed to buy Euro USD because NFP was terrible for the dollar. So Euro was going to be strong. So I was supposed to buy. A lot of retail traders sold their dollars and bought Euro, lost money, even though fundamentally that's what they're supposed to do. This is why it didn't work. This is why what we do is more important than anything else in the media. Markets give supply. Where are they coming to? I think my little girl fell terribly. Terribly. Breaks my heart. She's learning to walk and she's just falling everywhere. I apologize for the noise, but she fell. I actually want to go there now, but I'm with you. Right. Markets are leaving a supply into this. This is not a valid demand. It is a valid demand, right? It's a valid demand. This demand was created in March, into this long-term weekly demand. The month here is June now. Let's slow stuff down just a little bit so we can see what's going on. 365 candle, order block, whatever you want to call it. Contact with the demand. Contact with the demand. right? Because we made contact with the demand, you saw our price push back. Supply holding. Supply has even given us the type of imbalance we need, right? Why is price pushing back like that? Contact with the demand. Look at that. Buyers try to resuscitate. 1, 2, come back. First time leaving. If you do my module 2 and you look at this candlestick very carefully, you realize bearish engulfing pattern. This red candle swallows the green candle. When this happens, a supply is being formed. This is the weekly time frame. It's like the MTA is about the careful analysis of your chart to make a very good decision to make you money. A soldier shoots in wars, a plumber fixes toilets, a trader analyzes. You're buying and selling is 1% of the job. You're looking at this kind of stuff, right? So we've got a bearish engulfing pattern, which I haven't taught you yet, but we'll get. But just trust me, they've now created a supply on top of a demand. But your order block, what does your demand look like? Can you see how price keeps entering and deepening? I'm talking about this demand here, the bandage. Do you see how this bandage is just terribly being reduced? You see that? The deeper price goes into your order block, the less order flows in that area of value. This is supposed to be a buy, right? So the price is supposed to explode up. It can't, because markets are selling into the buyers. They're extinguishing the buyers. This is a weekly demand against a governing supply. Multiple time frame analysis. I'm trying to find the golden thread. Who are you fighting with? You've got a mayor fighting the governor, right? Political systems, president, governor, mayor, councillor. A mayor does not have as much power than a governor. Where is price coming from? The governing supply. That's why I like that GS1, WS1. It will help you see the whole picture. You start to see the relationship with money. So governor has put more money to sell. Weekly is trying to hold it. Who do you think is going to win? That's why we do what the governor is doing. So my governor is patient. He's not going to let this supply break. Glass effect for us means we can't take the trade anymore. It's too risky for us because we don't know if it's going to hold or not. For the governor, they just put bandages when they want. So we only take the high probability setup and watch them fight. We don't go fight markets with our $200 accounts. It's too small. It's a waste of time. We're going to get smoked with 30 billion, right? They take it out. You don't know this yet, but this is a supply. This is a supply. Two supplies into have taken out a demand. If they took out our PCP here, if they took this out, we would have known they want to go up. What they've done is they've removed their weekly demand, and now they're coming in for a retest here. So now they're retesting the original weekly demand. Please, as soon as I lose you anywhere, you just tell me to start again on that Zoom chat. Don't die in silence. Do not die. It's your class. I get paid $3 an hour. Do you guys know? It's $3 an hour for these classes if you do the maths. But anyways, oh God, yeah, right. So now let's draw this area of value tighter now. So now I just want to focus on my weekly demand. I've adjusted my monthly. I'm focusing on my weekly demand. This is what happens. I've got a retest here. You now know this. I'm going to remove it so that it's just clean and clear. My fresh touch has happened. My fresh touch has created a demand. That demand here was broken. Blah, blah, blah. Markets are now in this original weekly demand. 23rd of August, NFP is 2 weeks from then. Markets made contact on the 30th of August, on the last day of the month, back into a supply. Markets 3 days before NFP, you just spent months and weeks removing a demand. If you wanted to go up, why didn't you just go up? Now, a few days, literally just weeks before NFP, the month of August, from the 23rd, the week of the 23rd, which is the second last week of the month, really, or the last week of the month, is 7 days till the 30th of August. So that last week of the month into NFP, which is on the 3rd of September, markets give a far much more bigger rally than they did here. And where is price heading to? market is heading into a weekly supply. Okay, someone's asking a question, which is nice. If you do the maths, man, if you do the maths, my team, you know Alvin, I used to teach in 2019, I used to teach every month, but the academy was so small. In 2018, I taught 50 people who we came out of it from the South African Institution of Financial Markets. So I was top of the class then in 2018. So they wanted me to teach stuff. And they were like friends and colleagues, and some of them now are like long-term life traders. They're in my mastermind group, etc. In 2019, I taught every month, but it was not structured. So I'll just like be like drilling, and I'll teach like 3 people at a time or 2 people because I wasn't sure, you know, whatever. And I built a course in 2019, 2020. That's when I became actually serious, registered the actual academy, etc., etc. And my team hates it because it takes up a lot of time. But yeah, if you, on average, I do about $3 an hour for these classes, and that's fine. I like what I'm doing. I generally have no problem with it. I have a problem though when people make a fuss and want to do everything absolutely for free or whatever. But this, I love this. I love this kind of stuff. Anyways, let me not get distracted. Just before NFP, markets have arrived at a weekly supply that price has not bothered at all to break. In fact, you'll see me do this a lot in module 2. When we look at our order block, look at this. 50%, this is just a ruler. 50% of my order block is basically still intact, right? There's my order block. Markets haven't gone on the other side of the white line, which means 50% of my sell orders in there are still ready to go. They're still ready to slow down price. For us, we can't sell there anymore, glass effect, but we can find, in MTA, you'll be able to find one more daily fresh supply. There are many daily supplies in here. Don't get it twisted. Well, some of them are fresh. You can only find that through multiple time frame analysis. Let me show you what I mean. So let's go to the daily chart now. You guys understand the story so far. So this is the 2nd of September. See, our vertical line now is on the day before NFP. My vertical line is on the Thursday before NFP. So I go now on the public Telegram group. I'm like, okay, fine, guys, this is what I'm looking at. I think tomorrow NFP is going to be positive or negative. I think they're going to create these job numbers because I'm just kind of like trying to be as close as I can to market conditions, but I'm looking at my charts. What on earth would smart money do if they were in this position tomorrow? Right. Here's the daily time frame. This zone here is from the weekly, multiple time frame analysis. If I narrow down the true supply in the weekly time frame using the daily time frame, multiple time frame analysis, it means I must find the highest point in that weekly block will become very clear through the daily block, right? Which is this. Clearly, this is the highest point, a series of complicated 365 candles, specifically these last 2. So then I say like this, I'm like, okay, so this is where the weekly supply is, which is where that 50% line was for the order block, which makes sense now why price could come into that bigger weekly area, but my PCP was not yet broken because the daily supply inside the weekly supply that was holding price down is over here. Hope that makes sense. And price has not even began to touch this order block. When I say touch, I mean begin to actually drain at least half of that order block here on the daily. And this area of value for most intents purposes is fresh. You see what I mean? On the weekly, that whole area doesn't look fresh. But when you drill down, you can start to see some fresh cells. So I'm like, but what's actually going on this chart? This is me on Thursday. I'm going to remove this vertical line now because we all know that this is 3rd of September, NFP. So then I'm looking carefully. I'm like, what did Leroy teach? Leroy says price will move in zigzags from supply to demand when markets turn, right? You start to think about why did they make price turn? And if they make price turn and they give us an imbalance with a supply or a demand, if they do that, then all we have to do is to make sure we draw areas of value accordingly. What does that mean? It means we make sure we capture the highest turning point and reasonable body, and we're good to go. Now, this is Euro USD. Euro USD has no choice but to be strong if NFP is negative. Because if NFP is negative, the dollar is going to be weak. If the dollar is weak, then Euro USD is strong. But 365 traders, that's 20% of the story. Smart money from the beginning of times uses new, you guys, do you really think the FOMC, the reserve banks, see the data for the first time when we see the data? Is that something real? It's like you might as well believe that Beyonce and Jay-Z run the Illuminati and they're eating people's souls. I mean, you might as well just believe that kind of stuff. Do you actually think the biggest financial institutions in the world? There's a book called Economic Hitman that I lecture at when I lecture second-year university students. And Economic Hitman is this book of the transition of capitalism, so neoliberalism, fundamentally how American hires, CIA, whatever, FBI, blah, 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 blah. They are actual hired hitmen that control specific presidents in South Argentina and Africa, blah, 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 which their job is to create economic, political chaos to maintain a wealth balance. It's not like a weird story or what do they call them? A conspiracy theory. It's not, it's actual real life. The president of El Salvador must watch out. He's adopted cryptocurrency in his country. Be careful. Get the book, Economic Hitman. I've got a beautiful copy. It's an academic text. It's not like a novel or a science fiction. It's an academic book on policies, economic policies throughout capitalism, blah, blah, blah. Do you think people in charge of global money, it's a $6 trillion industry per day. Do you think if you own a $6 trillion US business per day, you would also wait at 2:30 on Friday to find out how your own country is doing with jobs? Do you know what NFP is? It is a total of weekly job claims. Every week, there is a survey bureau that calculates how many jobs were lost, how many jobs were created, how many people wanted welfare grants. It is not a surprise to smart money. It's not even a surprise to retail traders. It's a surprise to lazy people who want to wait for Friday, 2:30. Now, NFP, if it's negative, the dollar is weak, euro is strong. Basic fundamentals. So the euro danced. Markets finally uses weekly demand from the 23rd of August, 26th of August. Look at the last days, a week before NFP, 20 August. Markets finally find the strength to start buying. Now, whatever I say to you so many times in week 1 and week 2, if I want to sell something, I need who? I need someone to buy it from me to make money. If I want to buy something, I need a seller. 10 days before NFP, all of a sudden, the same demands that were being weakened and taken out, all of a sudden, you get a whoop, money, a push. Forget the whole month of August. You have been hovering around this demand since about June, July. No. You're only going to start pumping now. You've only finally found your low. Now, look at this. They literally took out another demand. This is a March demand. Look at this. It was taken out here. 11th of August. Why wasn't this demand good enough to push price up? I mean, if they really wanted to rally all the way up, this is a beautiful value-based demand. Why didn't they use it? Somebody has to tell me this daily demand is inside a weekly demand. This is a powerful area of value. Why was it smoked, right? Because they were waiting for a rally, but they are not just waiting for a rally, ladies and gentlemen, they are creating market conditions. Now look at this. If I scale back now, clean multiple time frame analysis, do you see how buy low, sell high isn't a joke? There are order blocks somewhere down here that markets probably haven't gotten to. And if I use the final wick here, you see this final wick there? This is price. So price came into this area here. This area is reacting to this wick there. If I could draw an area of value inside this demand, remember this whole green zone is weekly. If I drew a new demand inside the daily to start to cut things down, I would have an area like that, number one, because that's the lowest point, and I'd happily hold price there. But you'd have to learn about bullish engulfing patterns to understand why. or in module 2. So this was the fresh touch to that. That happened. They planned it. It's happened. We're going to buy there. We're going to put money there. We're going to do it. Markets come in and land inside a little bit deeply into this demand, taking out this, but very well knowing what's going on here. So I'm going to delete the one that was taken out, right? There's a base down there and then an area of competition, neither here nor there. Markets push back up to the supply. 10 days before NFP, they push back into this daily supply, which, if you remember correctly, is inside the weekly supply. Let me show you what I mean. Show you what I mean. You see that there? You see this weekly supply? See that order block there? This is all of this. Let's make it yellow so you can see it on the daily time frame. So you don't think I'm making the stuff up. All of this is happening inside a majorial supply. What does this do to volume of the orders on the lower demand? So what
does it mean? What does it mean for the lower one? Is there still orders there? Is it still strong enough or not? Or you know?
I got you, man. I got you. So and that's a very good question. For me, I mean, if I was in a rush, like you asked me this question, I was at Pick and Pay, and I was with my family, and I was trying to just move on with life, and I was in a rush. What I'll tell you is do what the governor is doing, right? And so what that answer would mean is if my governor is selling, this is dead. It's dead. But the technical answer to it, Mr. Alvin, is the orders are weak down there. Why? Because if you look at this entire weekly area, so let's just start from a weekly perspective. If you look at the weekly area, we already have a fresh touch, and now we've dug right into this. The zone is daily, but I'm talking about the whole weekly area. Our glass effect is done for the weekly. So the orders in the daily, they look fresh. And I get your question. Are there enough strong buy orders here? It doesn't matter anymore because a local councillor can't overpower a mayor, and a mayor can't overpower a governor, and a governor can't overpower a president. That's the analogy. So the buy orders in here, even if they buy, look at what happened. So let's look at the trajectory. Because I am dealing with a governing seller, we might not even have time to do MTA tonight, but we definitely had a bloody good class. I can tell you that right now. So look at this, for fresh touch, WAP, right? But now for a retest, and this is also a demand, by the way, look at how price will react, follow the rules, but price won't fly. Price will come back down because now the buy orders are not that big. And I suspect the same thing is going to happen. Markets are going to make contact with this lower demand and be like, yeah, it's a demand. And then whoop, that's going to happen because at the end of the day, the governor is going to win. Mr. Alvin, let me know if you answered. But more than that, we're going to extend this area of value across the charts to actually see if that's what happened. Maybe that's not what happened. So we're going to actually play the whole chart out and see what happens. But I do believe that this demand is going to be broken eventually. If it's not yet broken, I just can't remember. I do believe that it's not strong enough. It's a short-term buy. It's a short-term high-risk buy. And you better know when to get out on the daily time frame. All right. So just want to get some feedback. Well explained. Fantastic. All right, cool. Thank you, sir. Right. So I want to get back to my story, guys. There's not enough time. You know, we will do a cool MTA here. I don't want to do H4. It will confuse us. We actually need to drill down, by the way. Right. So on the 3rd of September, NFP is negative. We expect a weak dollar, strong euro. So, but markets price in everything. Daisy asked us this question last time. What does that mean? What does when markets price in everything? Let me quickly give you the formula right now on Euro USD so you quickly understand it. Here's the formula. I want to be a maths teacher real quick. Euro USD, here's the formula. GDS1 is in control. Sorry, not D. That's the formula. Governing supply is in control. Literally, you can't deny that until it's broken or until a governing demand is in control. A weekly demand will be in the way of the control of the governing supply, if that makes sense. So formula number 1, governing supply 1 is in control. When we drill down to a multiple time frame analysis, part of our formula is on the weekly time frame, we are inside a supply. So we've got a governing supply in charge, but we also got a weekly supply in charge. We've got sellers calling more sellers. Okay. The other side of our equation, E equals XC squared, whatever you want to call it, on the other side of our equation, we've got NFP, and NFP has become negative. And because NFP is negative, dollar is supposed to be weak. But because dollar is supposed to be weak, euro is supposed to be strong. If euro is strong, euro is supposed to buy. If we're buying euro based on fundamentals, this makes a lot of sense. Fundamentals only. There's nothing wrong with fundamental analysis, by the way. I'm simply saying, as 365 traders, we're going to damn well do a better job than other traders out there. We're going to understand markets holistically. This is the equation. What do we do? Who's right? Who's wrong? Governor in control. Weekly supply engaged in control with the governor. But today, the news is just, guys, a news event is a 5 to 15 minute time frame nonsense. Sometimes it will speculate a trend. Normally, that trend will happen because the trend is in line with who is in control. But if who is in control was selling and it's good news and markets push up, markets will push up to a supply. They won't go up forever and then continue with the journey, because the last part about our equation, which is fundamentally so important, is if I want to buy, somebody needs to sell. And if I want to sell, somebody needs to buy. This is the full trader's equation all the time for news events. Who's in control? Where is price? What's the multiple time frame analysis? Now, weekly supply, I'm in a supply, and on the daily time frame, if you remember carefully, on the daily time frame, why can't I write? Okay. Whatever. I'll just, oh, that's why. No, here. I can't write into that box anymore. Right, anyways, it's fine. On the daily time frame, please don't forget, there's also a turn, a supply. Daily supply, prices in a daily supply, in a weekly supply, being influenced and controlled by governing supply. Despite all of this, because of the excitement of NFP, all retail traders thought about last September was buying Euro USD. Despite all of this, despite the fact that the structure of the charts is screaming sell, smart money will use news events to lure in or create conditions. They want to sell. Now let's go back to the charts. Tell me what you would do as smart money. You're already in the midst of demands. Mr. Alvin has already pointed out that there's still one more demand to go inside this weekly daily, this week demand here. The smart money, you know, you want to sell. You want to sell the euro. If you read Fables of a Currency Trader, Barnes is trying to sell Euro USD super high on page 106 or something weird like that. It's so fast. Just read that book, man. Read that damn book. Please read the book. I'll pay you to read the damn book. Read the book, read the book, read the book. On record, I'm going on record, read the book. Right. Now, what are you going to do as smart money? Look at you as smart money. You've been selling this thing since the 26th of May. You sold high. As smart money, you sold high. NFP is coming. NFP could mess up your profits short term, because it's not going to change the trajectory of price. If markets have left a governing supply, markets got to go to a governing demand. Short term, sure, price could retrace. We'll talk about retracement and reversals when we're doing the fib stuff in module 2. But as smart money, guys, they sold here. Bitcoin, 53,000, there it is there. There, it's up there. They're selling. Now, you realize that you're in charge. If you're smart money, you know. And you realize that where price is today is not by the GD, the governing demand. Where's the governing demand? Yeah, all the way down there. You see where it is? See where the demand is? The zones we drawn on the governing time frame. So what are you going to do as smart money? You have this asset which you started selling at the price of $20 all the way up here. You could sell it now again for $12. You could, and push price all the way down. Or you could find a bunch of dumb people and convince them that your fourth-hand car that your grandfather drove, and then he gave it to your father, and then you drove, and then you gave it to your son, and now your son, the car doesn't even have an oil carburetor, it's got a broken down exhaust system, you've changed tires 10 times, it's got 300 kilometers mileage. You could find a stupid teenager and tell them, yo, this is a vintage car, it is a classic. I know a lot of people think it's worth $12, but let me tell you something. My vintage classic is actually worth $15. So I'm going to give you a discount, bro. I'm going to sell it to you at 15. I'm never going to charge you what I paid for it at 20. That's what smart money does in the markets all the time. It finds dumb retail traders and convinces them that this is what the worth of an asset is. So they drive price up. Now, if you go through the fundamentals in September, we needed a good jobs report so that FOMC could taper early. FOMC has announced that we're probably going to taper anyways on the 4th of November. But back then, in Jerome Powell's FOMC meeting in August, 23rd, 22nd of August, it's literally, there's a transcript online. You literally say, we're going to look at the next two jobs reports. The first week of August, NFP was amazing. Can I tell you something? There it is there, 6th of August. The forecast was 870. The actual was close to 1 million. It was mwah, and it was beautiful. The dollar rallied, went crazy. And now FOMC needs to say, if I get another one, listen to this. I am literally the federal. I'm saying, if I get another good jobs report, I'm going to taper. I'm going to increase interest rates. We're going to strengthen the dollar. You're literally putting that out there to the market. What does market start to price in, right? They start to price in that move. Like now, the dollar is strong because we're pricing in another threat, promise to taper on the 4th of November. This game is played all the time. There's a lot of information, so people just forget that they've been used. But there it is, 6th of October, beautiful NFP. 2nd July, beautiful NFP. Nah, 3rd September, they got you, right? Now, check this out. So there's a lot of anticipation, right? So let's use this final demand, this week demand down here. And the last 10 days of the month of August, they push price up into a supply. Now, what are the rules, ladies and gentlemen? Do we ever buy inside a supply? I'm taking my time on this because I never do a full debrief on news trading. I think it's silly fundamentally, but it makes money and people love it. Do we buy in a supply? Hell no. We sell in a supply. So when we see a news event that has the potential to make euro bullish, NFP is negative, therefore euro is bullish, but euro be chilling inside a supply, it's a trap. It is a trap because we don't trade news, we don't trade fundamental data, we don't trade feelings, we trade supply or demand. Look at it. There, look at it, it's right there. Market literally the day before NFP on the 2nd. Now, yes, as a trader, you must always think in probabilities. Probability number 1, are they going to break it? Right? So if they're going to break it, they're going to break it. I agree with you. Euro is going to be so strong, Leroy, that supply is going to be broken. Oh yeah, sure. But here's the problem. If they break this supply, they're going to fall into another supply. And if they fall into another supply, they're going to break the weekly supply. When they break the weekly supply, they're going to go through the monthly supply. It's possible. There's a possibility about it. Never. I'm not saying that's a low chance it can happen. But if it does happen, we can catch the trade, guys. Let them break the supply. They will pull back. And then we're here with them. Right? If you want to do that trade, that makes more sense. You don't want to time a trade. You want to buy because NFP is negative, dollar is weak inside a supply that is inside a supply. It's a supply inside a supply. This was a fresh touch, by the way, into this, which was going to lead you to a fresh touch into this, which means it was going to be the first time twice you're encountering sellers, institutional sell orders. Let's drop to the lower time frames. Let's take it down to the bone. When I was watching this level, let's go 15 minutes. This was one of my last big trades of season 1, how to 5x, 2x, 3x your trading account. Wait, someone's got a question. Why didn't you pick the higher supply? Let's go back to daily. This supply, Mr. Kokoma, talking about this supply. Personally speaking, sir, I can tell you now, my area of value was drawn this way. I both supplies. Remember my rules. If there are two supplies or two demands stacked against each other, I both supplies. So when I looked at this area of value, remember this whole grid here is the weekly supply. I'll show you, right? Weekly supply. And for me, from a weekly perspective, already my area of competition is all the way there. So I did that first, then I looked at the daily. And I was like, oh, okay, so this is the area of competition for the weekly. So if anything happens, what I didn't want, for a swing trader, I'm patient. I don't mind markets going against me for 3 days in the negative. I mind if markets go against me for 3 days in the negative and hit my stop loss. But if you're not going to hit my stop loss, I'm chilled with you. I'm going to hold, right? So my area of competition, Mr. Kakoma, number one, starts here. Starts by the weekly area of competition, number one. I just want you to know that about me when I trade. Right. So normally when I want to swallow an area of value, I'll look at that. So that was potential. So I think I had a couple of sell orders here with very, if I wanted to go big on this trade, I don't think I went too big. So maybe here I had 0.30, two of them, 0.30 lot sizes. Why? Because my stop loss was going to be outside both daily demands. So what I do is I always swap leverage for safety. So I can't do both. You can't have a big lot size and a big area of value. The bigger the area of value, the more pips that area of value is worth. The more pips that area of value is worth, well, fundamentally you're in trouble, because technically speaking, the more money you're putting at risk. So what I like to do when I'm for a news event, because I know everyone's going to focus on the 15 minutes, I'm going to catch all of them, is I will have an area of value. So you think in small accounts, right? You got a $300 account, you got a 0.01 here. Let me show you. Guys, my second book, Power of 0.01. I'm putting that out there. I will make time to write my second book. My first book is done, kinda. I'm waiting for some final feedback. I've sent it back to the editor. Thank the Lord. So it looking like a December Christmas release. Blah blah blah. But next year I'll start manuscripts on trading psychology. Right? Look at this. Let me show you something. Where are my Google tabs? Where are my Google tabs? There's a Google tab I'm looking for. A pip calculator. I use a specific pip calculator. It's easier. I'm going to teach you to do this stuff manually next week, by the way. You must learn it. You must do it manually first. Don't rush for these fancy websites. You must learn. If something happens, you must be able to do this yourselves. I will share my screen right now. I'm just looking through like 4 or 5 screens, trying to figure out where on earth I put that pip calculator. I always have it close by. All right, there we go. Let me drag it actually to your screen. Let me drag it. Can someone just quickly confirm if they can see something? Pip calculator on screen 2. Can just someone confirm? Unless if I have to reshare. I have to reshare my screen. Okay, you guys see a pip calculator? We see it. Fantastic. I'm just going to drop the link to that in the Zoom room right now for you guys. You can copy and paste it. You can bookmark it. We'll talk about this stuff in the war rooms and blah, blah, blah. It's easy to use. Look at this. Big account, small account. Everybody can do this. Everyone can do this if you're smart enough with risk management. We'll talk about risk management. So Mr. Kakoma, I don't want to miss out on what seems to be an obvious trick on retail traders. Here's my area of competition. So let's say you're at a $300 account, a $200 account, right? So you see, I come here, I grab my information line, info line. That's what I did. From the area of competition all the way outside this, because it's a business deal. I need to make sure I can afford the business deal. I do something like this. Because remember my stop loss, where's my stop loss, guys? My stop loss is always outside my areas of value. This is now outside 2 daily time frames, number one, if you want to look at it like that. Or you could say it's outside the weekly supply. Something goes wrong on breaks daily. Hopefully there's enough sell orders for the weekly supply. Now you see this number there at the end, 140. That's going to calculate the pips between my entry, area of competition, and my stop loss. It says there 140. Right. Let's say you have $100 account. You're going to come here and you're going to put 140 pips. You got $100 account. If you got $100 account, 5% of risk on $100 is $5, which means the biggest lot size you can use if you want to stay in the game forever is 0.01. So now this does the maths for you quickly, tells you, look, man, this area of value, this class is so bloody good. I have to share it with everyone. Goodness gracious, this is wild. You guys, please don't take this for granted. This is I don't know when I will be creative enough to teach this way. Teaching is a pedagogy. So you see, I was low energy, drank strong coffee, feeling better now. My back is sore, but I'm happy about class. So now my mind, it's weird. I could teach the same class tomorrow and I won't say things the way I'm saying them today. I feel like I'm coming across so clear. You'll be the judge. But I'm saying this area of value is 140 pips. There's 140 pips, pip amount. But as a trader, you know your account, right? Let's say you got $300. 5% is going to be 0.3. So your stop loss, if you're wrong, you're going to lose $42 of $300. If you're wrong at $100, you're going to lose $14 of $100. Whatever. So because of my account size, on the accounts, I normally like to trade quite aggressively. So I've got accounts for everything: high impact, low impact, long-term swings, short-term, and intraday trading. I think I was on 0.30 times 2 right here because I wanted to make sure that I could handle the hits, right? So normally for news events, I budget about a $2,000 stop loss hit, right? So it's like if I miscalculated the wick and I have to pay a price, it can't be more than $2,000. It cannot be. I'll lose my mind if it is, right? So I had 2 trades, roughly about $840, 2 trades there. Okay, you would have done the same with your account. You'd have done 0.01, whatever, blah, blah, blah. Let's keep it simple tonight, 0.01. So Mr. Kakoma asks, why not both supplies? This is it. I would have covered both daily supplies, Mr. Kakoma, because I don't know the power of NFP. What if NFP decides to break first supply and then turn in supply 2? Right? So if my stop loss is just only an outside first supply, they're going to use me for liquidity, take my $14, take how much I'm risking, 14 or to be $7. If your stop loss is outside here, right? If your stop loss out to be halfway to be $7, or take your money and then drop. I ain't gonna play that game. So I have entry area of competition because psychologically I can hold. I can hold a minus $600 loss before markets hit my stop loss, hoping that my analysis is true and markets turn with me. All right. So that's number one. And then I always have what I call the true sale. So the true sale is somewhere here. And my true sale for NFP September, I don't want to lie to you, was not triggered. Markets did not arrive. So I had another pending order here, another one. I hope that makes sense. But the thing is, because this pending order is the highest one, don't do it in your first 3 months while you're growing your account. But this works very well for me in general. If I start selling a little bit low in the high, in the supplies here, and I always put a second, no, I've closed that trade. I was going to show you, I was in a short-term Euro USD buy this morning where I did something very similar, where I had 2 buys, right? And one of them on my testing account, let me show you, because you're going to say, he always tells us stuff, but he's making it up. We never see it. We never see it. Right? Remember, I'm testing out quick trade as a broker. I'm trying to learn them so I can quickly move everyone in the Wealthy 3 Years program into stocks. Africans and buying stocks and selling stocks and investing in stocks. It's like an allergy. Do you guys see one of my live accounts, Quick Trade Live, sharing screen 4? To me, it looks like you can see. So let's do it. Right. So I wanted to jump onto this. Right, so this is multiple time frame analysis. You see, this is this is the newer, smaller accounts that I have. I had a buy limit order there of 0.02. You guys see that there? Clean, right? Let's go to the 1 hour time frame. You see the 1 hour time frame? Mr. Kakoma, you see what I did? I knew this morning this thing was going to go up. This is today's pending order. What I didn't want was to be bait on these niggas, brokers, platforms. I didn't want to be bait. So look at this. I've got complicated 365 candles in a rally. I've got a demand here, beautiful imbalance. I've got a demand here. I've got okay, right. And then I've got this break of trend. I'll teach you this stuff in module 2. Don't worry, we're gonna do trend lines correctly with supply and demand. I got you. So then I realized that, look, man, there's a high chance that markets are gonna buy here today. I am going to be in this trade today. Let's start building this account. So I go in 0.02, nice and low. I think it's like a 2,000 Rand account or something. It's 2,000 is it's like $130. I'm back testing module 3. And when you back test stuff for people, you have to remember, no one's going to start with a $20,000 account. So can you create a course where people can actually trade small accounts and grow their money? That's the goal. Someone's asking a question. Killer class. Yeah, cool. Thanks, Colin. Thank you. All right, cool. Yes, okay, you guys can see it. Fantastic. Right, so this was me today. Mr. Kakoma, remember you asked me about 2 supplies on Euro USD. This is the same thing I did on 2 demands. Right. So I knew markets. Look, there's my, once you see me do a trend line, I'm saying there's a break of structure, a bearish momentum is done. This is the demand that broke out the bearish structure. There's money in here. So my area of value is this big. You see, it's in my area of competition. Look at me. I didn't follow my own stupid rules because this is something you must pick up with yourself when you start to trade. It's a small account. I don't want to sound snobbish. I'm gonna be very careful how I talk to you guys. I'm not better than anyone. I've just got 8 years. That's all it is. Long time. I think no one in this group will ever beat me in losing money in the markets the way I did, because I didn't have me then. I don't think you guys will blow the amount I blew in total. 51,000. It's there. $51,362 in 3.5 years. I tanked my family. Homeless, eviction notice were like this all the time. We lost all motorbikes, cars, to pause uni. I had to work 8 jobs. I was a tutor. I did some research gigs. Lucky enough, I was quite qualified in my post-grad studies. I literally drove this beautiful woman mad. I drove her mad around this stupid dream. So what I'm about to say isn't to make myself better than. I'm telling you right now, you will never lose as much money as I've lost in the markets. It's impossible, fundamentally. I literally died for this. I could have given up, and I did, by the way. I gave up so many times, and that girl picked me up so many times. She started, so now on Saturday we've got a charity, but it's linked to cycling. Started doing all these weird things to get 500 rands here, 400. Go try again, go, and I'll blow it again quickly. 3 days, poof, gone. No bread, no milk in the house. Anyways, the reason why I'm saying this is I broke my own rule, because I keep telling you guys, always use the area of competition. But it's been a long time since I handled a very small account. And that's why I said all that. I'm not trying to sound snobbish, like, oh, he's only got big account. It's been a long time. I've been back testing module 3, but outside of that, it's been a long time since I traded $100 or whatever. And so I can tell psychologically when I trade, I have this, one more mistake and I'm down $5. And if I have another mistake and I'm down $10, it's still affecting me. I'm working through it myself, but it's beautiful because I get to fully function in your shoes. People will start with small accounts, and I love it. So what I was supposed to do was to expose myself a bit more. My entry point was supposed to be correctly drawn according to my area of competition. There's my bloody area of competition. That's the wick. Look where my entry point is. You see this green dots? That's my buy limit order. So I want to buy a little. Why? Because I don't want to expose myself. If my entry point is up here, and then I'm risking more pips. Fundamentally, Mr. Kakoma, with the reason why I ended up making this fatal mistake, because I'm not in the trade. I was not triggered in the trade. I was right about direction. This is 5 traders. We can never get this stuff wrong. But I'm not in the trade because I let my fear and my emotions of losing a small account. I don't want to have that record that I blew an account. Head trader blows account. If it happens, it happens. It's part of the game. But I'm fighting it. And I must be careful how hard I fight that, because I'm starting to get in the way of my own progress. Look at this, ladies and gentlemen. This is from today, literally 10 a.m. today. Markets have gone up, give or take. I'll tell you right now, 64 pips. 64 pips. You got $100 and markets have gone up 64 pips. Right? $100. That's all you can make, $100. You got, I don't know, $1,000. Markets have gone up 64 pips. and it continues and it continues and continues. That's where we are right now. That's literally where I am sitting. I missed out on that money today because of this. Now, there's my area of competition. That's where I should have entered. What I did do was I started to drill down. And I'm like, nah. You see my yellow zone? My yellow zone decided to cheat the code, to go even lower and lower into the smaller time frames and find another reasonable body and tell myself, nah, don't worry, markets are going to come down low. They like being low. And because of that, Mr. Kakoma and everyone else, this is what I saw. I realized, because there's a demand here, some weird thing going on here. I don't even know if you can call it a demand, but it is a demand. And this demand, my stop loss was going to be outside everything. It's going to be outside this demand. It's going to be outside this demand. It's going to be outside this demand. So in total, this area, I was risking about 120 rands. I don't know, that's nothing. But I don't want to lose. For $8, I risked $8 on this area of value. Because you see, and that's the logic. So my first trades, I generally like to capture price. I reduced the lot size, and then I had this area marked with a shotgun because I was day trading. And I told myself that if price triggers trade 1 at 0.02 and actually dares to come lower, right, lower here, because this area of value here, you guys see this here, as I'm talking about here, if markets had come lower here, my second stop loss would have still been outside all these demands, even though a good stop loss would have even been here. There, that's all I needed, or here. But just to be clear, I didn't want to be left by the banks. I was willing to hold a negative trade as long as it hit my stop loss and it was going to go back up. We were right about it going back up. I was going to come here and maximize on loss. So here I was going to go 0.5, 0.05, or 0.04. I was going to double the buy because now price has come lower. Do you guys remember how I started this class? I said as an investor or a trader, you're going to need to learn how to dollar cost average. At 0.02, if markets come here at this green line, 0.02. But if markets go lower and I'm still sure it's a buy, I'm going to increase my lot size. I'm going to increase my lot size right there because it's a better chance. Because now if I was risking 100 and something, 120 rands, which is $8 US, the lower price comes in, right? The less pips are exposed. I can swap that out for slightly bigger leverage. Something's going on in the background. I hope you guys can hear me and I'm still online, blah, blah, blah. Right. So long story short, the exact same thing happened with Euro USD. The difference is, as I said earlier on, for this upper sell, I was not triggered. Right? I was only triggered here because I took the weekly area of confirmation. My stop loss value was there. It made sense for my account size to have such a wide pip count. But here, I won't even lie to you here, I had a standard lot size. I had one standard lot size. I was willing to trade at one standard lot size, but unfortunately, it was not triggered. Price didn't make it all the way up because this daily supply held its ground, right? I'm so sad that we're out of time. I really hope this helped you. I am terribly sorry for those of you who came specifically for MTA, but we've done parts of MTA, I won't even lie. Can we just quickly use the remaining minutes to break this NFP trade down? So now we're going to start to scale down to the 1 hour time frame. I want you to see it. I really want you to see it. It's been a great class. Fantastic. I appreciate the feedback, Akoma. Thank you so much. I just don't want to get bad reviews. I honestly don't care. I generally come every night to do what I think will help you. I really don't want to lie to you. I'm really here to do what you paid me to do, which is to teach you how to trade properly. Right, we can keep a syllabus, we can keep a structure to guide us, but once in a while, this is important. Right, so remember our arrow, this is the 3rd of September, midnight. NFP is 2:30 every Friday. Let's find it. Let's find 2:30 every Friday. I'm on the 1 hour time frame. I'm going to zoom out a bit because this I found even more funny. You remember this zone? This yellow zone right now is the killer, where I was going to go one standard lot size. This green area is the supply, the turning point on the daily. I'll show it to you one more time so we don't get confused. This green supply here, let's make it white. So this is a supply, right? This white supply is literally the supply inside the supply above the supply, right? Basically, this gray supply. So let's go back to the 1 hour time frame. So I'm looking at this thing and I'm actually recording. My NFP videos are on YouTube. They're online. I'm recording this stuff September. I'm telling you guys, I'm prepping you guys the day before. Tomorrow NFP is what's going to happen. Yada, 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 yada. Hey David, I'm gonna upload this tonight, brother. I'm gonna actually push this out publicly as well. So you'll get it tonight. I promise you. Sorry about the network. There are thunderstorms outside today at my place, anyways. But I'm impressed with what they've done with the network. I'm gonna be offline again tomorrow, but there's no class. They just need to come link my gaming system to blah blah blah. It's like a long story, right? So, anyways, here's the third. I'm now on the 1 hour. Remember, you're doing multiple time frame analysis, monthly selling, weekly selling, daily selling, but NFP is coming out today. What you going to do? Let's see the picture. So I'm looking at this on the 1 hour time frame. You're going to do what I've taught you to do. You're going to take all the 5 types of supply and demand. You're going to find them. I don't want to see you guys here on the 1 hour time frame for the first 3 months. Remember the rules. You're going to do this on the daily, but I want you to see it play out. This is what the 1 hour time frame looks like. I am going to draw a line here. Some will call it a trend line. This is just so you see what's going on. All this stuff on the other side of this line doesn't matter anymore. Okay, I'm telling you this right now. It doesn't matter. On the 1 hour time frame, I'm gonna literally do something like this. Why? I'm going to look at the highest point of the zone where price actually gave a clean imbalance. Look at everywhere else except for here, right? And it matches with the latest turn, with the latest market turn, which is over here. This, guys, was done on the 4th of August. In the same month, they decided to buy. They act like they were not. They act like they didn't start the month of August selling. Now they're the buyers at the end of the month. They sold at the beginning of the month. On the 20th of August, they're buying back their own dip. Hey, smart money. I've tightened that daily supply into an hourly chart. I am going to put an area here that we're going to call area of competition, the white line. I'm going to delete this white line. No, I'm going to leave because I don't even know what it's for. Let's make our area of competition green or something, because so we don't get confused. Is green visible? Can you guys see green properly? There we go, visible. So that's green, and now we're looking at the 1 hour time frame. And then I am going to come back to where price is relatively now. So let's do that. So this is me looking at charts Thursday and into Friday morning, and I'm watching this play out. And honestly, in my hearts of hearts, I believe if NFP is negative, dollar is weak, euro is going to be strong. Fundamentally, that's sound. But I have to go check my levels. What's in the way? Tomorrow, none of you are trading because you're still learning. But tomorrow when NFP drops and I'm busy running around for charity and all that kind of stuff, I need you guys tomorrow to look at markets and ask yourself, where is price going? You try and do it on the H4, H1 daily, right? Because daily, you're not going to see much because you're going to need the whole day. So you're going to see the action on the 15 minutes H1, H4. Try and anticipate. See what levels get broken. See why they were broken. When a demand or supply on a smaller time frame gets broken or removed, most of the time, it doesn't have confluence with a bigger time frame. You see how this supply and the one above is inside a weekly supply blessed by governing supply? That's confluence. The consistency of smart money in selling gave me confidence that this was going to hold. So now let's see. You remember our green line? Area of competition from that supply on the 4th of August. 9 more minutes left into class. It's been a beautiful 2 hours, 30 minutes. I appreciate all of you. There we go. So what did we say? If NFP is weak, NFP is weak. This is the 1 hour time frame, so it's 2 o'clock and 2:30. I can go to the 30 minutes chart because you're gonna be like, nah, I want to see 2:30, Leroy. I want to see 2:30. You see my arrow? This arrow here. You see that? You see that? 2:30. So what did we say? I'm on a 30 minutes chart now, but I'm gonna want to go back to 1 hour so you can see it properly. I say when NFP is weak or bad or negative, dollar is weak, euro is strong. Good news comes out for the euro. USA failed to produce 700,000 jobs. Oh my God, they failed to do it. Number one, they didn't just fail. They didn't make 719,000. Because the markets can do that, right? You can get a negative NFP, but it's like by 1,000. The markets are like, does that really matter? I mean, come on, 1,000 jobs. Is that really a big deal? Markets failed NFP by over 500,000. It's like a whooping fail. It's like a big, like, dear financial analyst of the world, how are you so wrong? Can't you count? That's exactly what the markets felt. So because of that, if there was ever a time in the history of NFP in 2021 for euro to be so strong, it was this NFP. Because it's not just that they failed, it means they failed by a why. It means everything we knew about the market is wrong. We need to reset. So euro explodes. Now, I want to go to the 15 minutes time frame, but I don't want to confuse you. So let's go back to the 1 hour chart. Let's try and see if we can read this level clearly. So markets explode. I just have to bring back everything and cut out everything. There we go. Because you really need to see this. So markets explode, news comes out, markets are about to explode. Let's talk about a couple of things. Sell high, buy low. Sell high, buy low. Never sell at a supply, never buy at a demand. What's going on here? The time here on this candlestick is 12 p.m. The news hasn't come out. Markets have touched my area of competition for a supply at, I don't know, at 4 a.m. that day of NFP. Markets are dropping. What's this? What's this? Okay, so there are some demands from the previous rally, the previous day, right? There are previous demands from the previous day. The news hasn't come out. It's literally, let's put 1 or 2 candles. Let me show you 1 p.m. Damn, that happened too fast. Okay, you get my point though, right? That there was a demand created the day before at 6 p.m. on the 2nd of September, where markets rallied, consolidated and rallied. And then the whole morning of NFP, we never buy at a supply. Markets had to make their way to a demand. You with me? Because someone's going to ask later on, how are you always right? How do you always know NFP before it happens? I look at structure. Why on earth is there a demand so close to a supply? Either it's a trap, you're going to break through it, or you need to use it. You need to use it. You priced in something about the market. There's my area of competition. Look at when the news drops. Now, this candlestick happened too fast. I want to show it to you. It did not. I was trading this live. I was trading this live. These candlesticks are violent by nature. Look at it carefully. I'm going to replay it slowly, but it's going to explode anyways. But I'm going to try and replay it as slowly as possible. Tell me how this candlestick starts off. The NFP news candlestick. I'm going to reduce the speed by 2 bars. Let's see what happens. The time here is 11 a.m. on NFP day. Geez, that's painfully slow. Let's do this. That, did you see? It started off red. Markets will come to the demand. As soon as NFP comes, for a split couple of seconds to literally seconds, the whole thing is red. Because markets quickly push down to that demand and then pivot up. Why are they going up? Because all of a sudden, America's like, damn, dump the dollar. So Wall Street, trading floors are dumping dollar, dumping dollar assets because NFP, the economy didn't create jobs. So first we go red, we hit a demand. Then we go green into a supply. Retail traders, yo, God, help us. They're here buying a high volatility candlestick. Don't do this stuff. Yeah, unless it's your third account and you like, if you die, you die. If you're one of those you die people, they're trying to catch the volatility. I remember have already started selling here. I think 3 days before, when at my weekly supply. I was holding on my small account, I was buying into this area. It's literally on the how to 5x, 2x, 10x your account on YouTube, live account, everything is there. On a small account, on the 50 minutes time frame, I was up this rally for 4 days, 3 days. Literally, it's one of the last The last videos I filmed for season 1, I was buying this rally. I was in Euro USD buying. On my big accounts, I stopped and I started selling right there. So all of this for me is red. But I know I'm in a supply. And then the red jumps even bigger that day to like minus 4,600 for both positions because of NFP spike. Markets moving. But now watch markets. Please understand this. We are in a supply here. There's a supply there. I've already walked you through the equation. Watch markets moving forward after NFP. This is now the exact same people who over leverage. Remember, the retail traders don't just trade NFP. They go in gun blazing with massive accounts. The same NFP, they just over leverage. Markets come down. Now on the 15 minutes time frame, if you'll allow me to just show you a trick for trading NFP, never buy the release of the news. Never buy the release of the news. You can't time it. Your internet might be slow. Your internet might lag for 2 seconds and then the news is up. And when the spike happens, it happens so fast. So by the time you hit buy on your broker, because you've just seen the results and oh my God, NFP is bad, and you hit buy, you're catching this. Markets are already here, up there. So you're already buying so high, a high volatile candle. I promise you most of the time, and I'm going to do an NFP backtest video. Most of the time, when markets do this on high news, they will retrace on the smaller time frame. This is a 15 minutes chart, guys. It's not like you have to wait forever. This is now price coming down literally, this is literally at 3:30. So 15 minutes markets went off. After that, markets have been coming back down. They will come back down. And all you're looking for is a level to sustain. So if you wanted to go high risk, which I'm not telling you to do or advising you, but if you wanted to trade NFP with high leverage, what you do is you go a big lot size here. It's not going to work all the time, but it's got a better probability. You go your one standard lot size as an example, not a suggestion, and your target profit is this high. You never pass the volatility area. I'm talking to traders who don't even know that we're in a supply. I'm saying if you're trading NFP in general, let's say NFP is in a demand tomorrow and markets are good for the dollar. You don't want to buy the impulse, you want to buy the retracement. You have to find on the smaller time frames. And you're not ready for that right now. I promise you will blow tomorrow because there's so many intricacies. You can't predict it. You have to see the structure. Markets came back here. So this would have been my short-term buy. Remember, I am holding a ridiculous sell. I'm waiting for price to tank here. And I've also got a sell order up here. But if I want to trade NFP, this is my range. Okay. Why? Because the buy orders, what did I tell you about Talitha areas? See these Talitha areas? You see them in crypto. You'll see them in stock. You'll see them everywhere. The buy orders, all of this, who was doing this? Who was stocking levels on the 15-minute time frame? It's so clear. You can't see on the 1 hour chart. But who on earth is consolidating just on top of a demand from about 11 a.m. on NFP day up until NFP is released? What do you think is going on here? Buy orders are being stacked here. What do you think? Why do you think markets explode? I would have been in here with a big lot size. Sure, stop loss tight right there. Markets went up a little bit. I chickened out. As soon as I saw this red candle, I actually closed. So I made about 500, nothing crazy. Like I made a $500 on a simple buy. But sometimes it actually rallies all the way up. It could have come up here. In fact, I'm not so sure it maybe did. This is still Friday. You are literally on a big lot size on still NFP day. I chickened out here because I was countering myself. Markets came back into the supply that they created. See this there on the 15 minutes chart. Pause. So much nonsense on this chart. This is very important. You guys, you're with me, right? I'm simply saying if when you graduate and remember yesterday we spoke about what makes you graduate, your account. Your account will help you graduate to do risky trades like this. You don't do this with money that you can't afford to lose. But I'm simply saying, never trade the impulse, trade the range. NFP will create a range on smaller time frames. You watch them go up. Oh, we're going up, sharp. What are you going to do with all the buy orders you left here? Talitha area, PCP, one touch. You only get one chance. Your NFP trade on September, the buy was at 4:45 p.m. In that trade, you must get out before markets close on Friday or before markets get to this supply. Simple. And markets will always get to that supply before markets close on Friday. Markets got up here at about 7:30 p.m. on Friday. NFP, no one needed to lose money. If you wanted to buy, you could have bought, but you could have bought right here. So I'm holding a swing sell. I'm taking a short-term high-risk buy, and I closed here. I could have held there, but I was like, bloody hell, what are they doing? And Friday, time for that golf, right? So I was like, nah, whatever. But markets rallied. This is a turning point. This is a 10. It's not three beautiful big candles, a big imbalance, right? It's not the perfect world's most best supply, but you are in a supply anyways, in a daily supply. We shouldn't even be buying. Look at how markets played out on the 15-minute chart. From there to there, retail traders bought somewhere up here trying to buy the impulse, lost money, get smoked immediately. They don't know what they're doing, right? They're very confused. Some open sell trades, forgetting that there's order flows here. Markets comes back up for a few moments. Those retail traders who are still in the trade or trying to buy support and resistance for the support now, hoping that finally NFP is negative, buy euro long, increase the speed. This is what happened from that Friday night into Monday, into Tuesday, into Wednesday, into Thursday. Long story short, supply won. They used the news to get a better sell. The dumb trader who was going to buy the third-hand car for $15 instead of $12. That's what they did. Guys, it's 8:34. Taking up a lot of your time. I just want to show you the Euro USD chart on the 1 hour time frame from that NFP day, because we're now at another NFP. I'm going to show it to you what happened ever since then. I want to show it to you. I want to show it to you. So this is where we are. This is NFP, 3rd of September. This is the 1 hour time frame with the rest of the chart. I just want you to know that markets have not recovered from that sell till today. My sell here, because it's in line with the governor, I'm not closing any of that's client money and my money. I'm not closing that stuff. I'm not crazy. I'm going to do what the governor is doing. My governor has been selling before NFP. My governor will keep selling after NFP. My governor is going to keep selling next week after tomorrow's NFP. My governor don't care. When my governor makes a commitment, my governor keeps pushing price down. Look at where we are. When we're fighting with these smaller time frames with retail traders and we forget, there's nothing wrong with the small time frames. Just don't forget multiple time frames. This is NFP was negative. Dollar was weak. Ever since then, what has the FOMC done? He's traded the dollar through other fundamentals. He said we're going to taper. So now your dream of a strong euro is gone. So is your account. Had you just followed governor. There we go. You can't tell me I've lost. Price hasn't even come back to kick me out. I should have added more sales up here in that NFP block. I didn't. I should have. But there it is. Clean trade. Guys, thank you so much for your time. I will make this class available tonight. I will share the crypto stuff with the group, Wangi. I'll do everything that you guys asked. I'm sorry I ran out of time. I will get up at 4 a.m. Promise. I will analyze USD JPY, USD Swiss franc, USD CAD, USD ZAR. If there's a buy play for NFP, I will also look at pound USD, USD, NZD, USD for sales for NFP tomorrow. I will not be available to trade it, so this will just be purely analysis. I must be honest, I won't be there to change my mind and say, oh no, remember, and this is important, this is what trips out traders. NFP is twofold. First, there is this issue of how many jobs did you create? But guys, if they create, I'll give you my predictions tomorrow. I'll stay up tonight. I'll look at some numbers and see how many jobs I think they're going to create. But let's say they create 600,000 jobs here, right? 600,000 jobs. Don't forget, if unemployment goes up, we have a problem. I don't care if you're creating 600 jobs. If we're losing more jobs, it's counterproductive. So what you want tomorrow unemployment to stay at 5.1 or go to 5.0, 4.9. You want it to drop. As unemployment is dropping, you want NFP numbers to go up. And when we say go up, we want them to be 4,000, 95, 500,000, 600,000 jobs, something medium term. If that happens, dollar is happy. strengthen. If jobs go up, unemployment goes up, problems. All right. So then I'll be looking at that data in relation to I'll do about 4 or 5 charts just because whatever. But anyways, I have to get up early tomorrow and get my day ready because by 9 a.m. I'm going to be this lady's driver. I'm just going to be driving around everywhere. Right, guys, I appreciate you. Thank you so much. There are a lot of people shaking my hand, clapping hands. All right, guys, thank you. I appreciate all of you. See you next week. Again, please, there's no need for me to send a PDF. There's still a lot to deal with in the PDF I already sent. If you notice, we talk about leverage, risk assessment, risk management. Can we have another class on Monday? Even if we're not behind anymore. We remember our class are Tuesday, Wednesday, Thursday, but just can we have an MTA session on Monday? Then we can continue with the program on Tuesday. You guys okay with that? Can we have 4 classes next week? Yeah, all right, cool. Everyone is saying yes. Fantastic. So let's have 4 classes next week. So Monday is 6 p.m. fine? Do people still want to keep starting early so we always finish at 8:30 on the dot? You want to go back to 6:30? But I would say Monday 6 p.m. if it's not too much of a problem for everyone. So we start at 6 p.m. we finish at 8:30. So we have a 2-hour 30-minute session on Monday, Tuesday, Wednesday, Thursday. Right, fantastic. Appreciate you guys. Have a good night. Shake my hand. And good luck. Good luck with everything. Enjoy your weekend. Goodbye. I'm stopping your recording now.